Okay. Am I live? Let's find out. We'll wait for YouTube to send me a notification. Sometimes it starts counting up and then it flips the counter back to zero. So let's just give it a few seconds. Let's make sure I have confirmation. I have no confirmation yet. I'm going to just assume, okay, there's the counter. I should be getting something from YouTube soon telling me that I am live. There it is. Looks like I'm live. Okay, let's begin. Right out of the gate. I don't know how many people we'll have on tonight or how long it'll be. It is a long weekend in North America. Is it Labor Day in other countries? I think May 1st is Labor Day in many parts of Europe, I believe. But let's just see what happens here. Rate cut expected on September 20th, September 18th. Even though it is priced in, do you think it's good for an income play by selling 20 Delta puts on home builders? It's not something I'm going to do. I think home builders have had a really good run. I think they're due for a rest period. I think a lot of excitement is being priced in, but on the other side of things, quarterlies are all good. Maybe they have more to go, but I'd be more cautious. I think there are just better value plays out there than the home builders right now. You mentioned in previous outlook the dollar would go up, which it did. I think I said I thought. So dollar going up, and then you showed correlation of it with oil and copper. And you are long both of these. So do you hedge short term or just let price recover and don't take any action? I didn't do anything with my Oxy or Freeport position. I didn't do anything. I'm still holding it long. I still have puts on it. Didn't do anything. Bit confused. Ex-dividend date. What happens when you short a stock? When you short a stock, you owe the dividend. You must pay the other side the dividend. Sell an option, nothing happens when you sell an option. The price of the stock falls, your option premium will increase. Usually it's in the price of the option, which means after the ex-dividend date, the option simply stays where it is. It doesn't increase in value unless it drops by more than the dividend. Do we have to pay for the dividend? You do, only with the short stock. If yes, would that be counted as a loss on the P&L? It is an offset against other dividends that you have received. Yes. Interested in TLT 100 strike January 26 at $6 premium. I'd like to know what you think. That's fairly far out in the future. I don't know how liquid they are. I don't know if you need to get out of how easy that would be. I would sell in the money puts, but I don't have that much capital to capitalize ideas. Well, you got 15 months to work off $6. So you could sell 10 Delta puts or 15 Delta puts on TLT. Oh, you don't have the capital to do that. If you're comfortable with the $100 in the time frame, you got to get to 106 for break even to begin with. So if you're comfortable with that, then and the time frame, sure. Not sure if you're answering questions just on the market, but could I purchase the applied level separately? Yes, you can. My CFA package just ran out. Tea. Yeah, you can. you can demonstrate that you're a CFA candidate, so you should get the reduced price of 320. Sure. How would you approach selling puts in a low vol environment? Yeah, well, yeah, it's not really that profitable in low vol environments. That is a bit of a drag. If you had low vol, low interest rate environment, I wouldn't be selling puts. I'd probably switch to buying calls or selling in the money puts. Um, well, you got to do what you got to do. You can't play the market you want. You got to play the market you got. And if the market you got has low volatility, and some stocks have moved into a good range to sell puts on, you sort of got to take what the market gives you. If the market's only giving you, 24% implied volatility, then that's what you got to take. Even though you'd like it to be 35, you got to take what the market gives you. So I'd still do what I thought was right based on underlyings. Um, my smile wouldn't be as big, but you got to play the market you got, and if you have a low volatility environment, that's what you got to do. What minimum days to expiration do you set yourself when entering a monthly options contract? Minimum? I'd be known to do 1 week options repeatedly. 30 to 45 days is a good time frame. Sometimes as high as 50 I'll go, depending on where we are towards the next option expiration. Um, if there's a dividend sitting in front of an option, once you account for the option, the dividend in the option, there might not be attractive premium. It might be worth hopping that one and going to the next one at a lower strike. It's it's not a science. It's nothing you can break down to a decision tree of if this then that. If it could be, then I wouldn't be needed. There is a little bit of, it's a craft, right? So there's a little bit of art, a little bit of science to this. Are you planning to take any new positions in American stocks this week? I noticed that wasn't mentioned in the applied series. So I mentioned five Canadian stocks. American stocks this week. Looking at a couple in the transportation sector. I don't know yet. They look interesting, but I hate to bring something up without me having finished my analysis of it first, because I don't want anybody doing something and then me saying, "Oh yeah, I didn't like that," and then somebody saying, "Oh well," I when I say that I'm doing something, I want to make sure that I've done my part in what I'm doing, just in case anybody out there says, "Well, I'm going to do the same thing." of when I when that happens, I do say, like, don't copy me. Make sure that whatever you do is right for you. Don't just blindly copy me, because sometimes I'm doing things for other reasons. So I don't know that I would copy everything I do, but I am careful in not mentioning things that I'm still just looking at. So there's two that, well, they look interesting. They've performed extremely well with low volatility, which is pretty impressive, given that these are hitting multi-year highs on low volatility. But I haven't really looked into them yet. So maybe those. You have Bank of Canada on Wednesday. You have jobs report on Friday. You have a market that I think is fully priced. I don't know that there's, I think we're coming up to, once you start with the rate cutting cycle, you're going to get a rotation in the sectors and the type of stocks that are interesting for the next cycle, whatever the next cycle happens to be. I don't know that I would carry forward too much or continue too much looking for more of the same of what I already have. I think it's time to start looking for different factor exposures. So I haven't really made up my mind, but I can't just list something right now. Just thinking, U.S. Hmm. Not off the top of my head, no. Would you partner with someone who is a son of a politician? Um, I don't know that I would hold that against them. Together, you will do wonders. His contacts and your money and skill. My money, my skills. What do I need your contacts for? People with money have contacts. I mean, what do I need your contacts for? Right? What are the consequences? Well, the first one that I can see is sons of politicians typically think they're more important than what they really are. They typically think they have more influence than what they really do. Um, I don't know that I need a politician for what I do. I don't know that a politician's contacts would do anything for me. I don't run a fund. I don't raise money. I'm not trying to build a resort in an island community, and I need 100 million. And I mean, I don't know that I need somebody's contacts. I'm well connected enough in the finance industry, having had so many people use my program and go on to be charter holders, and some significantly well placed people, well placed in terms of where they are in the hierarchy. If I really wanted to do something along the lines of a fund, I don't think it would be difficult for me to find a few partners who wanted to partner with me, and to raise money. I don't think it would be difficult. I don't think I need a politician's son to get that done. So you know, rather than me trying to figure out what a politician's son can do for me, instead of asking me would I do that, give me the scenario under which, like, other than contacts, what would this son of a politician bring to the party? I got contacts. I don't need a politician's contacts. I got contacts. I got plenty. So I don't know what your what a politician's son would bring me. As you say, it's my money, it's my skill, and you think you have contacts. Mm, I don't see the proposition in there. All right, where we leave off. How would you protect short put during a VIX spike? I wouldn't. Do you go Vega neutral? Nope. Long calls? Oh no. Low beta instruments like TLT? No. If I have a bunch of puts that are sold and the market turns down, I sleep well at night knowing that I didn't sell puts on speculative plays. I didn't sell puts on Nvidia. I didn't sell puts on stocks that have like Tesla 50, 60, 70 times forward earnings. The underlyings I have, I would own. So I wouldn't do anything. I'd probably sell more puts as the price went down, and it did. Last time the price went down, I had Freeport at laddered puts 48, 47, 46, 45, 44, all the way down. Same with GM, every dollar down. I kept selling more puts. Why? Because I'll take them. I'll take it. If you're throwing these companies out, I'll take them. Thank you. I'll take them. I would sell more. I choose my underlyings very carefully. So that if there is a downturn, and every day when the market starts, I think it would be nice to have a really good 2% down day today, because I want this and I want this and I want that, but I don't like these premiums and I don't like this price. So I welcome the down days. I just really wish that we'd have more follow through, not just one or two down days and then we all change our mind and then up we go with these V-shaped recoveries, but give me 3-4 weeks in a row. Give me an ugly month. please. I mean, please. Where we're down 10, 12, 13%, where everyone thinks, oh my God, I got to get out. This is never going to be what it used to be. Everything is over. The party is done. Give me more. Give me more of that. I just haven't. I haven't had that too much. I make the best and the fastest returns. Not when markets are dropping, but when they go back up. That's the setup, right? That's the setup. If you don't have the setup, you don't have that nice pop on the other side. So I sort of welcome those days, and they are just days at this point. You get maybe an ugly day, and then it's all over. It's everything is fine, no problem, nothing to see here. How would you describe the calculation of TLT? Well, it's a pass-through security, so it will have a net asset value that's equal to the value of its holdings. Other than effective duration and rate cuts, what else should we note? That's it. They're treasuries. That's it. They will respond to movements in the yield curve. There are a few conflicting data going on here. Manufacturing indexes show contraction, yet we have revised GDP upward. Services seem to be carrying the day on that. And when you have an economy that is, what is it now, 82%, 82 cents of every dollar is from the services side, 18 cents of every dollar is from manufacturing, that even if manufacturing contracts 10%, it really is 1.8% on a weighted basis, even with a 10% contraction. But if services expand by 5%, that's a 4.1% expansion on its own. So you could have a 10% contraction in manufacturing, 5% expansion in the services sector, and you're still printing pretty solid GDP. So it's not like it was in the 70s where we were, what was it, 45% manufacturing. Best way to reduce XLK exposure to lower beta: sell some shares, sell some calls. I consider selling September 220 calls at 435 to raise my effective selling price, but unsure if it's better to sell XLK directly without options. Well, if your goal is to hold XLK for years, if you say, well, this is a 15, 20-year holding for me, then buying and selling, buying and selling, buying and selling, that doesn't work. Selling the calls are great. If it goes down, you get 435. It lowers your average price. You have no tax hit that year, and you stay in the game, right? You're in the game. If you sell it, you got to pay tax on the capital gain that you generate, which you need a pullback of a certain amount to get back in, just to be indifferent on an after-tax basis. So you need an even bigger pullback. Unless if it's a short-term play, then sure, reduce it directly. But if it's something that you plan to hold for years, I would use the options if you're trying to reduce your exposure. 220 calls, 435 premium, 215 calls, 740 with a strike $5 difference. Shouldn't the 215s have a premium of at least, to inflected XLKs at 220? You'll get at least $5 for the 215 plus time value. There'll be less time value for an in-the-money option than an at-the-money option. An at-the-money option is 100% time value. So no, you can't add the time values at different strikes. You can't do that. No. So no. The 215s just protect you by $7.40 on the downside. But your effective exit price would be $22.40 instead of $24.35. Just gives you more downside protection. That's all. How do you decide when to sell in the money calls on your position with the intention of having the underlying called away at higher effective selling price versus selling the position directly? Um, it depends on the stock you're in. Let's say that I have 50,000 shares of a stock where if I tried to sell 50,000 shares, it's just not going to work out very well. It would be difficult to sell more than 5 or 6,000 in a day. And I've been in stocks that are like that, but they have options. Um, Selling in the money options is just an easy way to sell a whole block of shares at a price higher than the market without having to put it on the market. So you don't put downward pressure on the price by printing a sale of 10,000 shares, for example, and having other sellers penny up in front of you and lower the price or keep or you sort of cap the price for the day if you have a big print. If you have 50,000 shares and you want to sell 20,000 that day, going in the money and selling a call, uh, you're not even hitting the market. Like that price never prints in the market, so you don't disrupt um, what's going on in the day, and you remove what would otherwise have been 20,000 shares of selling pressure. So you know sometimes it makes sense to do that. And your logic for selling in the money calls is, let's say a stock is at 55 and you want to sell it. You can sell the $50 calls if you're getting $5.30. It's an extra 30 cents. Your logic is, well, at 55, I'd lighten up. If it went back to 50, I'd probably want to own it again at 50. So if you sell the $5 call and it drops all the way to 50, that effectively is the same thing as having sold it and rebought it back without having to pay any capital gain on it. Why did you decide to reduce your beta exposure directly by shorting SPY IWM instead of using options? Because cash still pays 5.5%, right? You short it. My cash position already acts as security against the position. You're getting US dollars in your account. You can take those US dollars. You don't have to keep them in cash. You can take those US dollars, and as long as they're in near cash, 1 month treasuries, you're good. So you can get the income from it. And it's, I think the thing that I like by using the ETF directly is I can increase and decrease by exactly the number of shares that I want. Options are 100 at a time. Futures are bigger chunks at a time. This allows me to fine tune if I want to add, subtract, using the shares. It just is a little bit better. Looking into applied level module, think it's amazing, but I'm confused if I could make use of it in the Indian stock market or if it's exclusive to the US markets. Well, every economy breaks down into 11 sectors. So understanding the sectors, I think, is important. When you go through a video like understanding copper mining, I don't think it matters what country you're in. Copper mining is the same no matter where you are. The same with gold mining. It's the same no matter where you are. Same with oil and gas exploration. I think it's pretty much the same no matter where you are. Same with ocean shipping. Ocean shipping is global. It's the same no matter where you are. So getting an understanding of the sectors, I think, are important. Options, the strategies work no matter where you are. You may be in a market that doesn't have a very liquid options market. Portfolio construction, the strategies are basically the same. You're in India, you can still do quite a few of the strategies that we recommend. You may not have the same variety in securities, but you can still do them. I use US stocks as the example for what I need to do. I don't need to take any action on that. When we start the financial modeling next Monday, you can do that with any company. It would be the same thing. Oh, maybe the analysis of the 10K would be different. Maybe projecting out or modeling out its revenues might be different because you'll come up with different assumptions based on the market that you're in. But They are all transferable skills. Home Depot guy here. Time for the good old pork beef spread reversal trade. Ran my Python script Friday, gave me promising results. Pork is 2.26%, 2.26x higher than beef. Pork is 2.26 high. Well, I think you mean that the other way around. Beef is higher than pork. 1.9 standard deviations away from 20-year mean. Spread 103.63, which is 2.58 standard deviations away from 20-year mean. So we got to watch these mean reverting trades. Sometimes they depart from their mean reverting level and they never return. Natural gas and oil did that with the advent of shale. Gold and silver did that as the yield on ore on gold started to decrease. So you have a much higher price on gold. It could be, I think most of a big part of beef comes out of Brazil now. There could be something structural in the market that now we have a new spread. That's always the danger of mean reverting trades is, what if something structural changed such that they don't mean revert, right? It could be that you have a shortage of beef for some reason, but a surplus of pork, and something with the herds over a period of time might take a couple of years to fix. Although I will say that spread can't get too out of line, simply because in the grocery store, you would simply switch to pork. I mean, it seems to me that consumers would simply just make that choice. So you have that going for you. Yeah, I think it's, if you're about 2.5 standard deviations away from the 20-year mean, sure. What are your thoughts on millionaires migrating to tax haven countries? UAE is set to attract most of them. China and the UK are expected to lose the largest number. Well, so China is going to lose people, I think, for China reasons. I don't know that I would point to, taxation policies or left-leaning or right-leaning governments and what they want to do on that one. I think the exodus of capital from China is for very specific Chinese reasons. The UK, this is what would happen, and this is what will happen when you decide to punish capital. Right? Is capital today can leave. And there are other countries that say, listen, we've got a system whereby you can bring your capital here and avoid all the reasons why you left. We're perfectly willing to entertain that. So if you, there was I shouldn't say a terribly written, poorly written or badly written book called Atlas Shrugged. I say badly written because it's not great literature. But it is, I think, as far as political philosophy, makes a good point. And the point in that whole book was, what would happen if your entrepreneurs went on strike? What would happen if the government leaned so far left that entrepreneurs just decided, that's it, I'm done? And it was, as you go through the book, you find that they have this valley, this hidden valley that they all fly into. Taggart, Reardon, John Galt is there, and they go on strike. They take all of their entrepreneurial talent and they leave. This was written at a time when capital really couldn't go anywhere. It couldn't go to the Soviet Union. That was offline. It couldn't go to China. There was really not a lot in South America. Europe was still rebuilding, after the war. So you could have these high tax rates. When people, especially more left-leaning people, say, well, tax rates used to be at 90%. So, yeah, but that's when you had no choice. You had no place to go. So Atlas Shrugged is playing out right now in these countries. Is capital is going on strike. How? They're leaving. I did. I'm not the only one. I'm not the only one. You go to Dubai, it's full of people like me. Costa Rica's got a lot of people like me. Panama, full of people like me who are not greedy, but are not going to sit back and accept a bad deal. 53.5% tax and being called a tax cheat by your own politicians, saying that I don't pay my fair share, coming back and asking me to pay a little bit more each year. Now you got capital gains inclusion going to 66%. You got talk of a wealth tax coming in. Oh, you got too much. You're too successful. We're going to take that from you. How dare you? There are people who are unsuccessful. How dare when you treat me unfairly and when you treat successful people unfairly, they will go on strike. So they will leave. California, Illinois, New York are good examples of states where entrepreneurs have gone on strike. They've simply just left. They've left. What was the last one that left New York that I heard last week? They moved their head office to Florida. Foot Locker, was it? Decided that that's enough of New York State taxes. We're heading to Florida. You have to be very careful, right? It is the fable of the goose that laid the golden egg, where the farmers are your left-leaning liberal governments, and the goose is the entrepreneur. And the left-leaning government feels that, well, we don't want to wait. We want it all right now, and cuts the head off the goose and finds out, oh, we just hurt ourselves. Your entrepreneurs, your successful people are the golden goose, are the golden geese that keep laying the eggs. And what do you have? You have inexperienced politicians who don't understand what capitalism is. It's not laborism, it's capitalism. The most successful country in the world and the most successful countries that have ever been in the world are the ones with the most capital, not the most labor. They're always the ones with the most capital, right? America was built on capital, not like the unions say. Labor didn't build that country. Capital built that country. It's called capitalism. Laborism is communism, socialism. That's laborism. Show me a winning example of that, right? So these countries are going to lose through their own ignorance, through their own limited ability to see that they're chasing away the very thing that built that country. So what are my thoughts on it? My thoughts are expect more. Expect more, because it's easy to vilify successful people. It's easy to keep going after them. It's easy because there's a lot of people who don't have it, who get a certain sense of satisfaction of seeing them taken down a little bit. If you can't have it, then I don't want anybody to have it. Or sorry, if I can't have it, I don't want anybody to have it. So you go ahead and yeah, take it from them. It kind of makes people feel good. It's sort of, along the lines of what Nietzsche would call slave morality, is that you justify that you're the good person because you're not greedy. They're greedy. They're tax cheats. They're this, they're that. We don't want to say that, no, hang on. They're job creators. They're successful people. They helped build this country. They built this city. They built this neighborhood. No. That's too good. That's too good. And you got to live with the fact that you're not that. It's easy to call them names and to take them down. And, well, we live in a world where we can just leave. So we don't need to fly into some hidden valley. Our capital can just leave, right? And there's a John Galt in Dubai. There's a John Galt in Panama. They're everywhere, right? Calling us saying, you don't have to stay there anymore. You don't have to put up with this anymore. The fair deal is gone. There is no fair deal. And I've said this before. If my upper tax rate were 40%, I never ever would have thought of leaving. I thought, well, okay, 40%. It's higher than everybody else, but okay. But it's not. It was 53.5%. And if you attempted to spend any of that money that you had left over after you paid tax on what the government called luxury items, your sales tax was 33%, not 13%. And then they want to say, what's going on in the US now? Harris saying, oh, well, what about unrealized capital gains? Not everybody has that. We need to tax that. That is a fast road to turning a lot of developed countries into developing countries. Canada is well on its way to becoming a developing country. If you continue with these policies, fast forward 10 years, it will be closer to a developing country than a developed country. So there's my thoughts on it. I think it is the natural reaction to treating people badly. If you treat people unfairly, if you call them names, don't expect them to hang around the party. They'll leave, right? It's only an idiot who would stick around and be called names and be spit on. They'll leave. And I don't blame them. In fact, I would encourage anybody with capital right now, if you have capital in Canada, in the US, in any of these developed countries, with the level of debt that they're growing, they got to pay for it somehow, and they got to get it from you, or they got to get it from your estate. You could see a day where there's 90% estate tax, because why create legacies? 90% estate tax on anything over, let's say, 5 million, 90%. You don't get to keep that capital. If you've been successful, you don't get to keep it the longer you stay. I would encourage anybody with capital to get the hell out of these countries now. You've made it. You've done it. It will be confiscated from you. It will be confiscated from you. That's almost a guarantee. Anyways, there we go. If you ever chose investment management as a career, manage your own fund, what kind of fund manager would you be and why? Credit, rates, macro, multi-asset, long, short? Probably not credit. Rates too. Some part of it, yeah. Macro, sure. Multi-asset, most likely. As far as equity, probably deep value. Value or deep value, I find, has some of the best returns. If you can play the options and you have patience, beautiful returns for what I feel is very low risk. A couple of months ago, was it 2.5 months ago, I started taking a position in CapREIT at 43, because it's just like, why is it there, right? You do your homework, you look at that, look at the nice return on what I think is probably the least riskiest investment I've made this year, is apartment REITs in Canada. Kind of a no-brainer. You sleep well at night knowing that you're in companies that are not going anywhere. They're not going anywhere. One of the ones that I introduced in the applied level, if you looked at the positions video on Friday, one of them is if you looked at it, you would say, they got a lot of problems. Yeah, but they're a network. They're not going anywhere. They're not going anywhere. They're not going anywhere. Right. So I feel very comfortable, especially at the price that they're at. You said hope is not a good strategy in a losing position. No, it is not. What tactics do you use with options? Okay, so if you have the applied level, there were plenty of videos in there showing you how I work my way out of a problem. I even did one in applied options where I purposely got into trouble. Purposely. I sold puts on 3 things. I said, one is high conviction. That one worked without a problem. One is mid conviction. That one worked out. One was low conviction. Then I said, I have low conviction on this one. It's not going to work out. And it didn't. And I showed how I worked my way out of that. Lamb Weston, I was in that one when it took a big dump. My average price is now down to, where's my, I'm now down to 65.92 on my average price, from a 72.50 put down to 65.92. Lamb Weston's sitting at just below $62 right now. Give it another month and I'll be in gains on that one. My average price will be lower. I've demonstrated lots of times in the applied level how to deal with that. What are the SEC filings you follow and read besides 10K, 10Q? Corporate inside transactions? Pretty much. I think that's the big one right there. Is anybody inside buying or selling? I just sign up for the at investor relations, and you just get notices. Sometimes the insider transactions are, you get them and you look at them, you go, oh, there's nothing interesting here. Especially the ones that are done for tax reasons. You mentioned that you don't use the S&P 500 as your benchmark because you invest outside the index and in options. However, couldn't you still serve as an opportunity cost benchmark? Yeah, you could look at it that way. You could say, well, you could have been 100% in SPY. So shouldn't that be your benchmark? But then somebody can come along and say, but you could have been 100% in NASDAQ. Shouldn't that be your benchmark? But then somebody else can come along and say, but you could have been 100% in this best performing benchmark. Shouldn't that be your benchmark? In which case you would say, well, I have to beat the best performing index in the world each year because I could have done that. Right? So all of them were opportunity costs because you could have done all of them. But I get your point is that there should be some measure. I seem to think for the style that I have, it is a cash rate plus a high yield spread based on what I do because it's got risk. It's not investment grade, even though I'm mostly holding companies with investment grade balance sheets. I would seem to think that you would have an absolute benchmark, which would be a cash rate plus a spread. Call it 800 basis points on top of a cash rate. So 13.5%. In all markets, right? To say that the S&P is down 20% and I was all in cash, I don't know that says much as for you as an investor, because almost any pensioner who's all in bonds at that point can claim that they beat the market in almost any sell-off. But it's not an appropriate. It's not an appropriate benchmark. But I get what you're saying, that there should be some opportunity cost, but that opportunity cost should be appropriate to the strategy that you use. If you had a money market fund, you could say to the money market fund manager, shouldn't you be beating the S&P 500? Because that could be considered the opportunity cost of your money. You didn't have to be in money market funds. You could have been in the S&P 500, but if that was the case, then nobody would have a money market fund. The money market fund should have a money market rate as their benchmark because that's what they're there to get. So yes, you need a benchmark. You need to be able to say, well, I could have done this had I done something else, but I chose to do this. Here's what I did. The question would be, is S&P 500 appropriate given what you do? I don't think it's appropriate. I think that a more absolute benchmark is more appropriate. I remember you said finishing each CFA curriculum readings, EOCQs first, then moving to the curriculum reading is better. In the case when the process is reversed. Not quite. What I said was that if you're reading the reading with questions already in your head, the words on the page matter more. So let's say that you were trying to get something done in the real world and you're looking at some 10K and you're looking at inventory and there's, they're making some comment about the FIFO, that earnings were hit because of a FIFO adjustment by this much. You think, FIFO, what is this? You got to go back to the reading. But now that you have this problem in your head, as you're reading it, it matters more to you. The sentences mean more than just if you had no questions in your head and you read it, you would be thinking, I don't even know what this is, but okay, I'll read this, but I don't know what it is. You will, I think, do better in the reading if you read the end of chapter questions. You're not going to know the answer, but if you read them as you're going through the reading, you'll say, this was a question. It's more illuminating. The words on the page are more illuminating when you already have a question in your head that you want answered. Can you explain what is the interaction effect in return attribution? The best way to think about it is a square. Let's see if I can do a square. I take a square. Oh, look at where the hearts are going up. Take a square. Oh, wow. Take a square, right? And increase the length. If you increase the length, you get that going on the top. Now, instead of increasing the length, increase the width, you get that going on down here. Now, if you increase the length and the width, you'll get another little square in the top corner over here. That's the interaction of the extra length multiplied by the extra width. That's the interaction effect. You can't break that down to just the length, and you can't break it down to just the width. It's the interaction of the two. So think of the interaction as the extra allocation that you gave to that asset class and that little extra allocation was the extra allocation you gave to that security. It's the interaction of the allocation, the extra allocation with the extra security. It's usually just given to security, the interaction effect, because it usually allocation is done at a sponsor level. Security selection is done at a fund level, so that to claim the interaction effect is kind of like sharing between the two. So usually it's just, if I'm given a higher allocation, I have a higher allocation as a fund manager, I still must make it work with security selection. So I'm not going to say, well, there's some part of the extra money you gave me that has to do with the allocation. You gave me 100 million, I got to make 100 million work, right? Instead of giving me 95 million. If my asset class does better, the allocation will do better. And if my asset class does better, it naturally would stand to logic that my securities did better because my asset class did better. So obviously the securities did better. So I had more money in my allocation when the securities did better. That's the interaction effect. Where did we leave off? What do you think about Macy's? I don't follow it. You mentioned using G-spread to measure credit risk is simplistic because if the government yield curve shifts, you get different readings without any change in credit risk. The bigger reason is that it only uses one point on the curve. Is the situation different with OAS? If the government yield curve changes and the bond's yield doesn't adjust accordingly, wouldn't the spread still change? Not necessarily. So let's take a really simple example. You have a 7.5-year corporate, and you found a 7-year bond and an 8-year bond. The 8-year will be off the run. The 7-year will be on the run. Don't really know if you want to do it that way, maybe a 7 or 10, but let's say you're going to use a 7 to 8, and you got a 7.5-year corporate bond. And what happens is everything stays the same, but the yield curve shifts up from the 8-year onwards. So the linear interpolation from the 7 to the 8 is now higher. Your G spread is now smaller, implying that the credit risk on your bond is now lower. But the price of your bond will be affected by the spot rates from the 7.5-year down. It cannot possibly be affected by the 8-year. So your forward curve did not change, but the linear interpolation between the 7 and the 8 did, thereby giving you a different G spread, but may not give you a different OAS, right? Dollar General, and you voiced similar concern over the state of consumers in USA. Did I miss the first part of that? Dollar General, and you voiced, okay. Is it possible there's a disconnect or a bifurcation happening between the economic data and consumers? Bifurcation. Could you be? I'm not sure what that means. I'm not sure if you're saying is there a disconnect between the economic data and the health of the consumer, or are we sampling when we sample, are we sampling from two different populations? That could cause issues in your statistics. So you could say, well, we're sampling the US consumer, but within the US consumer, there could be two distinct populations. Uh, that below a certain income level, things could be non-linearly worse than above a certain income level, right? So that you actually do have maybe two populations in there, so that businesses that cater to that lower end consumer might be telling a story that's dire, whereas businesses that cater to the higher end consumer might be saying we're on fire, right? So Apple might be saying things are doing really well, whereas some of the consumer staples companies we've seen saying, well, things are not doing really well. You could have a situation where upscale restaurants have 3-month waiting lists, but the chain roadhouses are suffering and trying to get by because of just the nature of the customer at those places. You could have that, sure. You could have two different populations. If that's what you mean by the bifurcation, sure, sure. I don't know how you'd pull that apart though, but yeah. You have been a university professor. From your perspective, what do you think traits of a good and successful university student? Being top of your class, always aspiration to become the best of the best. Well, I think a good student, I think you know what a good student is. I don't think you need me to tell you what a good student is. I think in the back of your head, even at the front of your head, you know the difference between being a good student and not being a good student. I think you know that. Um, Obviously, it's being prepared for the class, having done the readings, having being prepared, putting in the time, putting in the work. That's what makes a good student. Showing up for class, asking good questions, even asking questions. They don't have to be good questions, but asking questions when you have a question, availing yourself of the resources that are available. I don't think you need me to tell you that. I think you know what a good student is. Um, what do you think about the social democracy political ideology? Which one? The social democracy political ideology. Uh, which one? which political ideology? Which one? What do I think about it? I don't know. You tell me which one, I'll tell you what I think. I believe you said you agree with the wealth redistribution policies as long as the money is not given for free to the other side. No, I don't believe in taxation for the sole purpose of redistribution. Don't believe in that at all. Don't believe in that at all. That the idea that you got some, but they don't got any. So what we're going to do is create a spending program where we take stuff from you and we spend it to give to them. It doesn't exist right now. We're just going to create a spending program just to take it from you. I disagree with that. 100% I disagree with that. Number one, government is absolutely inefficient when it comes to spending. And there are no temporary government programs. They're all permanent. They become an entitlement, and that's all they become. If you say we're going to take taxpayer dollars and these people addicted to drugs are going into rehab for 28 days, period. Great. Okay. I got no problem with that. But if you say, we're going to take taxpayer dollars and we're going to buy these people drugs so that they don't get bad drugs, they get good, safe drugs. And we'll make sure that we give them a place to inject their drugs and we'll staff it with nurses to make sure they don't die so they can come back tomorrow and take drugs. We just don't want to stigmatize drug use. We don't want to stigmatize them now, do we? I am totally Totally against that. Uh, Lots of evidence shows that uh, most of those government drugs find their way onto the street because they're not strong enough. So they're traded in for stronger drugs. That the drug dealers simply show up to where the safe injection sites are to take the government drugs and trade them in for the street drugs. The crime tends to increase around the vicinity of these safe injection sites. The property values tend to be depressed in around the neighborhoods of these safe injection sites. There is no social benefit to them whatsoever if you say, well, they cut down on healthcare costs. So would rehab. Without having to buy them drugs, without having to buy them needles, without having to pay for a nurse, without having to pay for a location, without having to live with a concentration of drug dealers, without the depression of property values, without the increase in crime, so does rehab. I think we have too many politicians who think that you can't be tough. You can't be a parent any longer. You can't tell your kid, no, you're not leaving the table until you finish your vegetables because you know it's the right thing. You don't let your kid set the menu, ever. Raising a kid is, you're a dictator. It's a dictatorship. It's not a democracy. They don't get a vote. It's a dictatorship. I seem to think that if we start doing this kind of stuff, we're basically, I think, sort of abdicating our responsibility to other people to sometimes say the right path for you is a tough path. Sorry, but it is a tough path. If you're going to get past this, we can't do it with kid gloves and keep handing you, the drugs every single day. But that's what we do. I'm against taxation for no other reason than redistribution. I'm absolutely against that. Why don't we do that with everything? If we think that makes sense, sorry, let's head to the casinos and let's head to the poker table. And when some players are losing too much and one person is winning too much, let's stop the game and redistribute. You got too much, let's just redistribute. Why not do that with sports games? You got too many goals, the other team doesn't. Let's redistribute. Let's just make it all even again and let's just redistribute. Why not do that with readers? This newspaper has this much readership, this paper doesn't. Let's redistribute. You can't buy the New York Times anymore. You must buy. Let's redistribute. Why do we just pick money that we've already paid taxes on? I've already paid my penalty price. I've already paid my tax. Why not redistribute everything? Where do you stop when you start with that? Why privilege just money? Why privilege just money for redistribution? Why not redistribute a whole bunch of stuff? Why not redistribute all sorts of things, right? If you want to tax me to raise the standard of education, great. You want to tax me to reduce the level of crime? Great. You want to tax me to increase our security? Great. You want to tax me because some people just aren't doing as well as me? Whoa. No. I disagree with that altogether. All right. I heard you like skiing. Yeah, I do. Do you prefer it better than snowboarding? Well, I've never snowboarded. I don't know why I've never snowboarded, but I've never snowboarded. I used to have a wakeboard, and I could never get up on the damn thing. Water skis, no problem. Kneeboard, no problem. I was great on a kneeboard. I mean, I could do all sorts of things on a kneeboard, but the wakeboard, I could never get up on it. And I thought, well, if I can't get up on a wakeboard, what, why would I ever think that I could do anything on a snowboard? I just couldn't get out of the water. I don't know why, but I couldn't do it. Everyone else could. I couldn't. Didn't like that. And what about scuba diving? Do you like it? I do. I do like scuba diving. Do you celebrate Labor Day or Labor Day? Oh, you are. Oh, you are. King's English over here, right? Hi from Iran. Hi. What do you think about Intel? Are you following it? Intel's got some problems, right? Whenever you have a company with this many problems, I think you really do have to start thinking about a change in leadership, and maybe Intel needs a change in leadership. I think they're looking at selling off their foundry business, which seems odd because it seemed like their foundry business was the thing that was going to be the interesting part. Is that they had always, they were a designer and a fab at the same time. They had extra capacity. Or why not? Why not make it for other? You already have the investment. I guess that's not going very well. Is it leadership? Is it a loss of focus? I don't know. But when you have this many problems, oftentimes you need new leadership. Oftentimes for the simple reason that the current leadership is too close, and maybe unwilling to break, with the past. Maybe there are some sacred cows that they're just not willing to think about. Isn't unemployment rate increasing inevitable since the yield curve has been inverted for this long? I don't know if it's inevitable. And if unemployment rate starts to spike, doesn't the Fed have no choice but to cut rates? Well, I think they would. Inevitable, though? More likely? But you think that you would have seen something on the way up, right? You think you would have seen something. Yeah, I think if you made a bet on unemployment rate going higher, I don't think that you'd be too wrong. I don't know that I would use the word inevitable, though. Question for financial modeling. Do you anticipate including quarterly models akin to actual sell-side modules? I'm doing it annually because the focus that I'm taking is how do you go from the 10K and the words that are written there to thinking about how to model something. The quarterlies, especially the historical, the annuals are just the sum of the quarterlies. And going forward, I think forecast, unless you have a business with some significant seasonality, I think what the quarterlies do, you could take your annual divided by 4, and as the quarterlies come out, you're updating your quarterly. You should get some change if you incorporate the quarterlies in your calculation of whatever assumptions you make. You might get some changes in there. But you would have something for quarterly, updating a quarterly. That's a little, I think that's a little too much of a step on day one, is to go right into something like that. I think you first have to understand the functional format of Excel in modeling, how you get that functional form done, how you build these schedules, how you go through the 10K to determine the drivers of all these line items. Once you're done that, you can then start to put the complexity in and go from there. But if you start with a lot of complexity, you risk losing a lot of people very quickly. So you have to build up. You have to build up to that level. And if you've never seen financial modeling before, and you start going right into that level of detail, it's a little much. But I think that I would do the annuals. and then I would have somebody show, okay, here's where we are in the annuals. Here's how we get the quarterlies. Here's the next step. That if you want to follow it into the quarterlies, you can, because somebody else will do it, but I don't necessarily have to do it. There's a lot of really good, skilled analysts that I have connections with, that some have expressed interest in doing something, and yeah, sure. I have no problem with I have no problem with that at all. So uh, I've already identified a couple that will add in certain places, and I'll probably take the lead on certain things as well, because as I said in the video, I'm not an Excel expert. I get by, but I'm not an Excel expert. Um, I think we need an Excel expert, somebody that can say, look, here's a whole bunch of things we can do with Excel. So I will be relying on new voices for a lot of this stuff. The goal really on this is to create a financial modeling module in here that is simple enough that a retail investor can use, which I think would be an annual forecast, and not that they would ever do a valuation or care much about the forecast, or that the forecast would have a lot of value for them. It is the uncovering of all of the drivers that are important. What drives revenue? What drives expenses? So that when they're just watching the environment and they're watching other things, they can identify that, oh, that's a good thing for the company I hold. That's a negative. That's good. That's a negative, as opposed to not understanding what's driving any of the line items. To get it to institutional level, then yeah, you need need a lot more detail, and it helps if you have actual people who've actually done this, coming in and taking it from that level, which is most likely what's going to happen. Expanding on my question about the forward PE for the S&P, you have to forecast forward earnings to get a forward PE. Yeah. If so, shouldn't it be easy to look at what the forward earnings were predicted to be versus what they eventually were? Yeah, sure. That's not a problem. But so let's say that you're forecasting $250 in earnings, and earnings come in at 255. What does that have to do with the multiple? Let's say you had a forward multiple of 22 times and earnings came in at 255. What made the 22 correct versus the 20 versus an 18? So you have a forward multiple of 18, earnings come in, let's say they come in dead on, 250 comes in at 250. What made the 22 right? What made the 18 right? What made the 20 right? What made the multiple right? The whatever the multiple was before you saw the number, you say, bang on, the 18 must have been right. Well, no, the 20 must have been right. No, the 22 must have, whatever the forward multiple was before the earnings must have been right. But how do you know it was the right one versus 25 versus 21 versus 17 versus 14, right? How do you know which one would be right just by looking at the precision of the earnings estimate? Because it's two things that we have here, right? Is you're forecasting out future earnings, and then you're putting some multiple on those earnings. It's the multiple that I think that you are questioning, is how, can't we test whether that multiple was correct? Well, what makes 22 more correct than 20, more correct than 18? Right? So I don't know that would help you, and that's already out there. You have forward earnings and you have trailing earnings. You have the forecast for the quarter. The S&P Global spreadsheet breaks that down for you. You have the forecast, you have the actual. So you can see what the difference was. But I don't know how that helps you say, oh, the multiple must have been right. Let's say it was a 30 times multiple and earnings came in bang on as expected. Oh, the 30 must have been right. Do you see where I'm going with that? It's I don't know that it helps you answer that question. What do you think of Wall Street banks getting involved in cryptocurrencies? Well, they're doing what their customers want. Are there people out there interested in investing in cryptocurrencies? Just say yes or no. Are there people out there, whether you believe it or not, are there people out there interested in investing in cryptocurrencies? Yes. As a Wall Street bank that is introducing products to the marketplace, is there a marketplace for a Bitcoin ETF? Well, sure. Do you believe in it? It doesn't matter. It doesn't matter. If I were printing Bibles, I would say, well, the Bibles are going to sell. I don't believe in this. I don't believe in this at all, but the Bibles are going to sell because a lot of people believe in it. So the banks are really just designing products of which there is a demand for. Just because a bank has money market funds doesn't mean they believe that everybody should be in money markets. Just because a bank has international growth or small cap funds doesn't mean they believe everybody should be in that. It just means that there is a marketplace for people who want to be in that. So let's give it to them, right? Let's give it to them. I don't think the management of Walmart believes that everything it sells has value in their houses. I'm sure they put some stuff on the shelves where they go, this is crap. But there's a marketplace for it. So let's go ahead and put it on the shelf. What are the reasons behind you choosing 20 Delta puts often? Well, 20 Delta, it seems to be a nice number. If you think about the probability distribution, 80% probability, I think is a nice place to be. It's, I think, a good balance between not too safe, but not too aggressive. They're not always 20s. Depending on what I do. I mean, I use a lot of 40s. I use a lot of 50s. I even use some 60s and 70s. Happy belated birthday. Yeah, that was yesterday. God damn it. To explain complex concepts in somewhat short videos. Oh, that just sort of jumps into the middle of a sentence here. After watching 5 hours out of 12 in QM, I can say with high confidence that his videos at best below average. Lucky I have noted every time he could have explained things better. His explanation was poor or inefficient. I'm truly disappointed. I really wanted to like Mark platform because, like him as a person, it's kind of the only platform that fits my budget. My question here is, are Mark's videos poor on QM only? Well, okay, so the videos are not poor on quantitative analysis. I can tell you that. It's I've had this before where students don't understand something, so they blame the professor. If you're not understanding the quantitative methods, it just means that you need more work at it. But to suggest that the quantitative methods videos that I have are not understandable, come on. I've had enough feedback over the years to know that's simply not true. I explain everything. You could benefit, I think, maybe from some one-on-one tutoring. There might be a cognitive block you're having where, especially when it comes to quantitative things, if you miss one part of it, everything after that seems really confusing. If you said, let's see, if you said a reading like, what's a really crappy reading? Geopolitics done at level 1. If you said geopolitics, I'm not getting it, I would say, well, look at the material I had to work with. There's only so much I can do. I would sort of agree with you that, yeah, the reading sucks. But quant, fixed income, derivatives, that's my strength. It's not me, man. It's not me. So I think that you could benefit um, from some extra tutoring on that one. What do you think of Canadian mortgage default rates? A lot of mortgages from 2019-20 that were fixed will renew to much higher rates. They've been stress tested for some time now. I believe even 2019, 2020, 2021, they were all stress tested, 100 basis points higher. I think for the banks, it was mixed. Some had, I think they all had higher loan loss provisions. Some were mentioning loan loss provisions higher, mainly on auto loans and credit cards. I don't know that I'm too concerned about mortgages, because in the end, there's an asset. There's a collateralized. It's collateralized. There is an asset. There's more than likely enough equity in the property. So I don't know that that loan loss provisions are really going to be that significant for banks as much as credit cards and car loans would be. Where does your position sizing recommendation for theta come from? Sort of best practice when you're starting. It's not as if I invented the whole idea of theta portfolios. This has been around for quite some time when you're just starting out, so that you don't run into problems with your capital. Because when you start selling puts, you think, well, that was easy. Let's do another one and another one. And you may get carried away with it to the point where if the market turns on you, you get crushed. This way here, sizing it at 0.001, if the market turns on you, it's not going to crush you. And when you become adept at managing 0.001, you move it to 0.002. I believe last week Mexico lowered its GDP forecast for 2025. You still bullish Mexican peso? I traded in and out of it last week a couple of times. I got to 19. I think I picked up 1993, covered it like 1970. Where does it end? Where did it end? Got to 1960 something, then back up to 1970, 71, I think, to end the week. I don't know. I kind of am. I still think that Mexico represents a great opportunity long term. I think it's going through some issues right now. I think it's uncertain as to the transition of power, what the new leader wants to do or is going to do. But I think, once you get to 2021 on the peso, I think to not be in it would be the mistake. So I'm going to get back in the peso. I just don't know when. Until then, I will just watch the chart, and I don't want to day trade it, but it's hard not to, because it just presents itself with such a great opportunity when it goes too far in the day for what I feel is no reason. From your MO video, market out, you said that when the 2-year, 10-year curve uninverts, it can lead to the recession. Well, no, not that it can lead to the recession. It's if you look at the dating of recessions and you look at a chart of the 2-year, 10-year, the 10 minus 2-year, it tends to uninvert before the recession. Not that the uninversion causes the recession, but it tends to uninvert before the recession. That's the point that I was making. Is IBKR the best international U.S. stockbroker? I think so. Do you know Anson Funds in Toronto? No. What would Fed rate need to be to reach that 106 break even on TLT? You're at 90. Where are you? Call it 90. 90, call it 97. 97 divided by 106, negative plus 1, down 8.4%. You have a 16.5 duration at 8.5%. The 20 to 30 year segment would have to drop 50 basis points. We're over 4% on that part of on that segment of the curve. Let's have a look at where we are here. Outlook 428 on the 20, 420 on the 30. If you got to 370 on a 30 year, you'd be at 106. Yeah, the 20 to 30 year and around the 3.7% yield, you'd be there. You'd be at the 106 based on its duration. Because I imagine its yield would be somewhere around 424 right now. Right. Since you want to add negative beta, have you thought about crash insurance? I don't want insurance against a crash. I want the crash. I'm not insuring my house against a fire. I'm the arsonist. I want to light it on fire. So I'm not looking for insurance. What other option like payoffs can you use to protect? I'm not trying to protect. I'm actually thinking it's kind of the top. I'm not using it when I'm adding the short beta now. I'm not using it as something I'm using to extend more long positions. It's now an active position that I'm actively thinking this is. It's hard to do a short, especially a valuation short. They're hard to do because you have a valuation, because usually there's some psychology behind it. So I get that it's hard to do, but I'm willing to try it again. Beta owes me money. It beat the hell out of me last year. So the way I see it, beta owes me some money right now. Interested to hear your perspective on Python and other coding language future usage in finance. I think it's important. Yeah, scrape data and automate stock market analysis for options. Yeah, I think it's important. I do. Other than that, I really can't say too much about it. But I think for me, it's not important. Not at this stage in my life. It's not important, and not for what I do. It's not important. But I think for those of you entering the stage in this industry, I think it's important. What Fed rate do you think we will reach towards end of year 2025? Well, next year. Well, you have to think about what gets us to a rate. Let's assume no exogenous events happen. Nothing that causes the Fed to say we must cut rates, but that we just continue on as we are. Where would we be? This is a cautious Fed. 3.5 to 4 by the end of 2025 under its own steam. If the economy deteriorates, you could get to that 3.5 faster, maybe even, depending on the magnitude of what happens, 3. You get some exogenous event. Yeah, you could get there a lot faster. But it like forecasting something like that is really difficult to do, because you have to forecast a number of things. You have to forecast what will happen, and then you have to forecast the Fed's reaction to what will happen, not just the Fed's reaction to to nothing. There must be some. So it's more scenarios. You'd have more scenarios than you would have some target. You can wave a magic wand and every company adopt either IFRS or US GAAP. Which would you pick? I like IFRS. I like one standard because one standard is simple, right? There's trade-offs to both in terms of how things are accounted for. There are trade-offs. Like sometimes, okay, I get that this is more useful than this, or there are trade-offs to both. But one global standard, I think, would make things so much easier in terms of comparability. Well, maybe not even in comparability because IFRS does allow you more power to determine what you want to do based on your economics. I'd probably say IFRS. What are your thoughts on quant and AI algorithms? I don't have any thoughts on them because I don't use them. I'm not even adjacent to them in any way at all, and I'm inherently uninterested in them. Like I have no fundamental interest in what they do or figuring out what they are or getting in on this thing. So it's not my thing. What can I do to better understand, study the market? What is the go-to resource? I don't know that there is a go-to resource. Experience is the best. Be in touch with the market. Practice the market. Don't just study it, but practice it. Open up a fake account, a paper account, and just start trading positions. You will learn a lot when you do that. And I think the CFA curriculum, I still think is the best concentration of finance related content. I don't know that I would say that there is a go-to resource. It's a big field. There's a lot available. There's no shortage of resources available. Current view on Oxy, considering not necessarily positive oil markets. Yeah. Well, I don't think you're going to see $65 on Oxy anytime soon, but I also don't think you're going to see 50. I think it's well supported here, but this is an options play at this point. I don't know that it is a long position with a nice rally to the upside. I still think it's a nice put selling vehicle at $55. Even though there's not a lot of premium in the 55s, I was going to sell some 55s last week, and I looked at the premiums. I thought, I don't like the 50. I don't like the premiums. Plus, I already have enough sold on the strikes above it. Are you more bullish on Triple Q than XLK for a 20-year time horizon? Q's holding weight of NVIDIA is around 8%. XLK's holding weight is around 20. Which would you prefer? A lower weight is what I would prefer. Yeah, a lower weight. I'd prefer something that was a little bit more evenly distributed in its weights and not so concentrated. So the Qs, I guess, would win on that one. If we accept that rates work with a lag, could there be consequence due to the Fed not cutting earlier? Yeah, I think there could. I think they should have cut at the last meeting. That does not mean that they're going to go 50 basis points. What I think and what they think are two different things. I don't think they're going 50 basis points. Talk about the general user experience of the applied level. Is it video based? It is. And is it updated frequently with new content? Yes. Hang on a second here. The content is meant, I have to use examples in the real world, but I think that you could go back, and even if I use examples that are 3 years old, And I could do that. I could do an example of something and use data from 2019. It wouldn't change the validity of what I was doing. Just, you don't want to have to go back and update all your examples every single year to the most current example if what you're showing is a strategy that's timeless, that this is the strategy setup. If you're saying, well, that's the strategy setup, but what stocks do I do it on? You got to bring something to the game, right? It can't be me just saying, do this, do that, do this, do that. I mean, if that's the case, I may as well just have a website where, you give me $10 a week and I'll give you 3 trading ideas every single week. If you want to do that, yeah, I don't want to do that. I was just thinking about that going, nah, I don't want to do that. I don't want to do that at all. It's more timeless. Same with the financial modeling that we're going to do. I'll be using Costco annual report up to the end of 2023. Their year ends on Tuesday. I think September 3rd is their year. No, today was their year end. It's the Sunday closest to August 31st. So today was their year end for 2024. So sometime in October, we'll get 2024 statements, but we're going to use 2023. Even if you were watching this 3 years from now, with 2023 statements, the process is identical. Just because, I use an example from a period of time, the process would be identical. So that's what we're learning, is the generalizable skill that we can then transfer to any topic, not specific skills where you always need me. At some point, you should not need me. That's success. If you constantly need me every week to say, do this, do that, do this, you're not learning. You're outsourcing your thinking to me. And that works until it doesn't work. What advice would you give a recent graduate who's trying to start their career in finance? I am, as I say, every week I get these questions about the market. I am far removed from the job market, far removed. So I wouldn't even know what advice would make sense. Could you explain once again why 1 year at 4.38 implies 200 basis points of cuts? Well, the Fed funds rate is 5.33. Let's say over the next year, we expected no rate cuts from the Fed for the next year. You bought a 1 year T-bill today and no rate cuts were going to happen. That T-bill should yield 5.33%, because every month of its existence, the Fed funds rate would be 5.33%. Now, let's say that it's yielding, and we'll make round numbers so they're easy to work with. Let's say it's yielding 2%. But you expect that in 6 months, there'll be a rate cut down to 1%. What would be the yield of that 1 year treasury today? We could do a simple weighting on it, that for 6 months, for half the time, it's going to yield 2%. For the other half of the time, it should be, at that point, it's a 6-month security. After 1 year, it's a 6-month security. It should yield what other 6-month securities are yielding, which would be whatever the Fed funds rate is, which is 1%. So if we expect that would happen in 6 months, the yield would be 1.5%. You have a weighting of 50% of the time with 2%, and a weighting of 50% of the time at 1% will give you 1.5% on the yield. The 1.5 is lower than the 2 by 50 basis points, implying 100 basis points of cuts. So you take the difference in the Fed funds rate and the yield and double it. So the Fed funds rate is 5.33. A 1 year is 4.38, roughly about 100 basis points down. That implies linearly over time 200 basis points of rate cuts. That's all that's doing. Anyone in the chat can answer this too. When is the applied course starting? Applied the applied level has been up for, this December will be 3 years. I started with just option strategies because that was my skill set, and it's expanded into portfolio construction and sector studies, and now we're going to go into financial modeling. That starts on Monday. They're not live classes. It's just I will be putting up videos every week, walking through. I'm done all the way up to. We're almost done the income statement. I'm almost done. I only have to forecast interest income, but you can't forecast interest income until you forecast cash. Usually it's the last line of the, it's a last line that gets filled in because you have to get through, well, your balance sheet and then your cash flow statement. You get all the way to the bottom, your change in cash. You need your change in cash to figure out what your beginning cash is each year, to figure out what your interest income is going to be. It's going to be extra challenging calculating interest income over the next 5 years because rates are coming down. So being that Costco uses both marketable securities and cash equivalents, we're going to have to price out our cash on a forward curve. Isn't that going to be fun? We're going to use the forward curve over the next 5 years to price out what our cash return would be. And then we have to sort of have some assumption, because marketable securities are the 3 month to 5 year category. We can't just assume everything's going to be 5 years, but we're going to make some assumption in there as to what the interest income will be. But it's a smaller component in the marketable securities than in the cash. So you're never going to be 100%. You're never going to be right to the penny. You just simply don't have that kind of foresight. And even within Costco themselves, in the finance department, if you say, what is going to be your interest income over the next 5 years, they would probably say, I don't know. We don't even know what rates are going to be. They'd probably have a best guess as well. So that's what we're going to do, is just a best guess. I'm all the way there. We're ready to start modeling relationships on the balance sheet. You won't be seeing those videos for 6-7 weeks because I have to lay them all out. But I am done up to that point. It's going to be long. It's going to be far more detailed than almost any other financial modeling course. Most financial modeling courses are 4 to 15 hours. They try to get it all in within that time. I wouldn't be surprised if we hit 30 hours, 35 hours, because I need you to understand how to analyze a company. Like it's called financial modeling because we are going to use Excel. I think it's important that you know how to use Excel to lay out your forecasts. So there are two words there: financial modeling. Modeling is Excel. Financial, well, this is the 10K part. This is where we get to Costco's merchandise revenue or membership revenue, and we say, well, how do we forecast membership revenue? You may think, well, that's easy. They tell you how many members they have, and they tell you what they charge per membership fee, right? But their membership count is a trailing average from 6 months to 18 months ago. There's also the penetration rate between the membership rate that they have, Gold Star, and the executive level, which pays twice as much as Gold Star. You pay an extra fee, so it's an equivalent to another Gold Star membership. But they have comparable growth, and they open new stores, so they have new store growth. But they charge different prices in different countries, so you can't just use $60 as a US price. You can't use the subscriber count, because if you did, you can never recover the revenue number. So you're left wondering, well, how the hell are we going to figure out what membership revenue next year is going to be? And to complicate things even more, as of September 1st of this year, there is a $5 increase. So if you look at just a naive growth rate of membership revenue over the last 5 years, you'll miss the $5 increase. There's an 8.33% jump automatically. You have to look at the aggressiveness of the store growth. You have to look at the retention rate. Oh, you say you have, 71 million members, but you have a retention rate of 91%. 91% globally, 89% rest of the world, 93% US and Canada. Do we break that down? So it can get really complicated really fast. So you have to find some elegant way to say, well, we need to be simple. We can't get that complicated. How are we going to forecast membership revenue? Obviously, there's going to be some component of comparable growth. There's going to be some component that is going to be new store growth. And if we expect it linearly over the year, then we have to divide that by 2. That makes a lot of sense. We have to figure out what the effective membership count is by assuming that each executive membership is just yet another Gold Star membership. And we have to build into the price because every country has a different price. So we have to start from revenue with our assumptions and build into a price. And from that price, forecast that price out. Now we've got price. What about quantity? Because revenue is price times quantity. Once you start realizing what the drivers of these things are, when you're following a company, suddenly things start to matter more because you say, okay, I know I use this as an assumption, this is an assumption, this. So when they report, I want to know what this number is, what this number is, and what that number is, and you want to check. And you want to make sure that it's coming in as you forecasted or higher. If it's coming in higher, the company's worth more than you thought it was originally. That's valuable for a retail investor to know, as opposed to waiting for earnings and seeing the company sell off and going, why is it selling off? Like it had good earnings, because you're only looking at one number. So there's a lot that we're going to go through. The rigor that we're going to go through in understanding the drivers of every line item, that's the value. The Excel part, yeah, okay, we're going to put it in Excel. Excel is a tool, and the marketplace, especially for UCFA Canada, is going to want to know that you can do the Excel part. But almost all the financial modeling courses that I've seen, and I paid for them, I can't use my own name, but I've had somebody else buy them for me and I've gone through them, is very heavy on the Excel side, very heavy on the modeling side, but then takes the real data and just doesn't dive deep enough, because you look at the simplifying assumptions, you go, but you're making a bit of a mistake here. I mean, I'm not singling anyone out, but one said, you really can't model too much on this. You can't really say too much about this. No. You're mistaken on that. You can say something about that. So we're going to spend more time on the financial analysis aspect of it than we would on the Excel side. So this could easily blow up to 40 hours. But I want you to be able to take any financial statement and break it down without even having to do a financial model. And because I don't do these financial models, but I break down these companies and I look at what they're doing, and I go through the same analysis I would go through as if I were going to model it, but I never actually forecast out. For me, I think it's just a waste of time. I don't need that, and I don't do valuations. I just need to know what the drivers are and whether or not we're in a situation where those drivers are in place for this company. Great. A lot of times, it's enough to know that this company probably isn't going much lower. Beautiful. I love companies like that. AT&T was like that. It was sitting around $16, $17 in that little range. This is not going lower. I don't know where it's going. I think 20, 21, 22 is a fair price on this one, but it's not going any lower than where it is right now. I think this is where it is. It's good enough for me to know that. It's good enough for me to know that. That's the skill I'm going to give you. That's the magic I'm going to give you. And then you should be able to look at any 10K. And if you go through the same process I go through, the same process, you should be able to put every company into one of 3 buckets: a buy, a sell, or a hold. And then you design your trading strategies. If it's a buy, you buy it. If it's a hold, beautiful. Let's sell some puts on that. If it's a sell, I'm not always a big fan of shorting a bunch of stocks, but if I need to lower my beta exposure at any point in time, if I think there's going to be a sell-off, it's nice to have a list of stocks that you have in the sell bucket that you can then sell calls on. Because if the market's going to be weak, you expect those will be really weak. So you can lower your beta very quickly by having them. It's kind of like having bullets in the chamber, right? You don't got to fire the gun, but you got a loaded gun just in case you need it. That's the power of it. Honestly, for what what I'm providing, if I were just going to take that, just Costco and CapREIT, and just spin those out and say, well, what if you didn't have anything and you just created this one course about here's a 10K and here's a blank Excel spreadsheet. Go. Where do you begin? And we're not making any shortcuts here. We're going to go right to the point in the 10K, and we're going to start reading, and we're going to learn how to pick out the important information. We're going to learn the difference between IFRS and GAAP, because that's going to matter. If I had to price that out, if I had to take somebody through a really in-depth case study like that for 40 hours, that's a university course. What does a university charge for a semester course? Some are up to $3,000, anywhere from $1,000 to $3,000 for a semester course. This could be priced at $300-400 all on its own, but it's not. Right? It's part of the applied level. It's part of what you get, because it's part of what I believe in doing, which is delivering overwhelming value. And this is, I think, a critical part of the application from CFA. You do level 1 FRA, financial reporting analysis. You go through level 2. There's even, there used to be a financial modeling reading in there. You go through the equity analysis. And then after level 2, if I threw you in a room with a spreadsheet and a 10K, and I said, okay, model out just revenues for the next 5 years, what would you do? It's very different when you're faced with the messiness of the real world. Questions give you all the variables. So you say, okay, a lot of times questions, it's plug and chug. Okay, here are the variables I need. Here's the formula. Let's put them in. Off you go. What if you don't have the numbers? What if you got to come up with the numbers? What if you had 15 choices of the numbers and you think, well, which choice do I make? Oh, well, there is no right choice. Depends on how you see the world, right? So I think on this one here, this one will be, I think, probably worth the value of the applied level all on its own. We'll see. We'll see. I mean, you may get halfway through it and say, this stuff is garbage. I'm lost. I don't know. We'll see. Based on the history of what I've done in the past, I've never had an issue with acceptance of it. So, where did I leave off? I wonder if there's been research done on gig work and tax implications, since 1099 contractors self-report. True. Could it be consumer spending is elevated due to inaccurate tax filings? So a nice way of what you're saying is these are tax cheats, right? Yeah, gig workers make contract work, and there is probably a low probability that if they claim 60,000 but made 90,000, that they'd be audited or caught. Although I think that the probability of being flagged for audit is higher if your income is almost entirely contract work. It could be. I'm not sure how are Uber drivers and Airbnbs and Verbos, do they not issue tax receipts? I am sure they issue tax receipts that you pretty much have to claim your income. I'm pretty sure they do. So it's just, if you're, let's say, doing work for somebody else for $1,000 for 20 hours, let's say, or 10 hours of work, what is there that suggests that you should claim that? Nothing. You may even get away with it. Banks don't report the activity in the bank account to the IRS unless it's requested. But keep in mind that everything that goes into a bank account is footprints in the snow, man. The bigger you are, the harder it is to hide. If you're not doing cash, you better understand how the system works. Could you please talk about what do you think about Chinese stock market or Chinese economy? I don't know much about it other than what I read. I believe it is challenged right now. It's got some growth issues, but beyond that, I really don't know much about that market. I really focus on what I know. Curious on your thoughts on quantum computing. Will we see anything on the sector in the applied level? This has been talked about for such a very, very long time. The quantum computing, these are not new words. This has been around for quite a long time. Is it something, or is it something in the lab that's making progress, or is it something that has a commercial application that's out there? I'm unaware of a commercial application for it at this point in time. So if it's in the lab, then it's still just in the lab. I'm sure at some point, if it's something, I'll have something on it, but in time. But I don't see that as being a big thing right now. When you will prefer rolling puts forward instead of getting assigned? That's a good question. Sometimes I don't mind the assignment if I can roll forward and pick up a good premium, I will. Why wouldn't I? Why wouldn't I? But sometimes you roll forward and you're picking up 20 cents. It's like on an $11 stock, okay, I'll pick up 20 cents. On a $67 stock to pick up 20 cents, I'll just take the shares because I can do more with the calls. So I'll take the shares. Thank you. But if I can roll forward and pick up some good premium, or even better, roll forward and down with no loss. Yeah. So if I sold a put at $2 and it's going to be put to me and I can roll forward to the next month and down for, the same price that it would cost me to cover, why not? If it's now $3 and I can roll forward and down for the same $3, it's a pickup of $1. I'll do it, right? On a slow moving downward stock that's just bleeding over time, if you need to, you could continually roll forward and down. At some point, you got to make a decision about what you're doing with that thing. But for a couple of months, if you have to do that for a couple of months, you do that, and then you reassess. At there've been times where I've rolled down and you're faced with the prospect of rolling down again. You think, what's the point? I mean, I think this is done. I'm going to be rolling down for the next 6 months. Let's just stop right here, or I'll just sell a call and be done with it, right? CLHG futures dropping with an inversion of yield curve just confirm the inevitable increase in unemployment. I don't know how you can. Copper has not. Copper's had a good week. Even though the dollars had strength, copper's had a good week. I don't know that CL has had a bad week. Markets closed, but we can certainly look at the where are we here? Metals. A copper 415 was solid on Friday. That's a 6-month chart. Let's look at a 1 week. We were at 430 on the 27th, settled in around 420. I think this is the right range. I did say that several months ago when we ran up, I think 4 or 5 months ago, ran up over 5. It didn't make any sense, but that I think that 4 to 425 to 430 is probably the right range for where copper is. I don't see that. I would not say that the price action on copper was due to the uninversion, hence unemployment is inevitable. I can't. I don't have a straight line on those dots. Let's have a look at CL. We'll look at the October contract. Yeah, CL did not have a good day on Friday. Right at I believe it was 9 o'clock. Had a big drop at 9. CL, I think, is under its own pressure. You have rising output in the U.S., rising shale output on fewer wells because of enhanced oil recovery. But I think you have OPEC Plus that is probably at some point going to say, okay, you can't. We're not going to keep pulling back for your benefit. So I think it has its own thing. Again, I don't know that I would say that the curve uninverting, and it's not uninverted. It's just from a downward sloping curve. It's now flat. I don't know that I can draw a line from that is the cause of this. And since oil and copper are doing what they're doing, unemployment's going to rise. I don't have the math to make those connections. So I'm I can't go with you on that one. But I get the feeling that you want that argument to be true, that there is going to be an inevitable increase in unemployment. I get the feeling that you want that to be true. Rather than starting from the conclusion and looking for the reasons, I don't know that I would start from a conclusion. Is unemployment going to increase going forward? Try to find some good economic reasons why you think that would be the case, and then some reasons why you think that wouldn't be the case. You have to think about the counter argument to it. Does chicken fill in as a substitute for beef? I don't know. I know that beef and pork have had a long relationship. I imagine chicken must be a substitute for all of these. You have a choice between chicken, beef, and pork. They're the three most popular meats. I'm sure at some point. What about turkey? I don't know that turkey's a big thing. I don't know that it's a big thing. It's a lot of work, right? Steak, you throw it on the barbecue. Pork, you throw it on the barbecue. Chicken, you throw on the barbecue. Turkey, it's just like so much work to get it ready to do anything. It's so labor intensive that I think it's only for certain. I think it's an event meat and not an everyday meat. Pretty confident I passed level 2 last week. Would you recommend that I start level 3 already, beginning with the asset allocation book? Yeah. If you're fairly confident you pass level 2 and you want to begin level 3, sure. What is stopping the tax haven nations from adopting higher taxes due to the influx? Where do you go then? Well, nothing is stopping them, really. They derive a lot of their revenue from property taxes that they otherwise wouldn't have, right? So you buy some property somewhere, there's a land transfer tax. That's a big thing. Most of the product coming in has some kind of import duty on it, so they derive their tax revenue from that. And then you have your property tax that if they weren't a tax haven, most of their property would be worthless. Right? Property in Dubai is only worth what property in Dubai is because people live there. Before that, it was just desert. It was just empty desert. It was worthless land. So if you can convince a whole bunch of people to live there, you got to have them favorable tax laws. You have the labor that builds all of those buildings, and you're going to sell the buildings at a profit. You're going to have a land transfer tax. You're going to have a property tax. You're going to have a tax base. You're going to bring product into the country that you're going to have a tariff on. These people aren't going to cost you anything because they're not taking any social services. and they provide a very large tax base. Why would you would think, why would they give that up at that point? Right? You have to have your own health insurance. You don't get any kind of state sponsored health insurance in any of these places. If you got to pay for it yourself. You pay for everything yourself. You get no social services. It's not as if there's no tax. There's no income tax. Taxes are there. They're just in different places, but there's no income tax, right? So for them to suddenly start raising taxes, I think would be a mistake when they could just build another condo tower, make a whole bunch of money on the initial sale of the condos, the land transfer tax, and then have an annuity, because every condo in there has to pay property tax every year. You got this annuity every year for the next how many years, filled with people who are not going to use any social services, but are going to buy things, that are going to use local services, that are going to use nannies, cleaners, things like that, that are going to employ the people in your country and create a tax base you otherwise wouldn't have, because you have no other industry. You have no industry to create jobs. So why not do this? It would be shooting themselves in the foot if they did that. How would you encourage more investment of capital in the U.S. instead of holding it? The corporate tax rate in the U.S. doesn't seem too high, and the U.S. still has high corporate investment. How would you encourage more investment of capital? You have significant investment of capital in the U.S. This is a question for Canada, because Canada has a productivity issue, because they do have an investment in capital problem. How would you encourage investment in capital? Number one, stop punishing capital. There's an easy thing to do. Stop punishing capital. Give it a much more preferential tax rate. But what did Canada do? Took it from a preferential tax rate to less preferential. Went the wrong direction. That's the wrong direction. You should have gone the other way. But we don't have bright people making decisions. We have doofuses, right? We have a drama teacher and a mediocre journalist that are making decisions about the largest budget in the country, right? What could go wrong? What could go wrong? Stupidity. I mean, that's big. Well, I wouldn't say it's stupid. They're not stupid people. They're just generally incompetent for the positions that they hold. They're doofuses, in other words, for the positions they hold. So how would you encourage more investment of capital? Give it a favorable tax rate. Simple as that. Give it a favorable tax rate. So if you want me to invest in businesses in Canada, and you say, well, hang on now, if you're successful, we're going to charge you more tax now. It's not 50% inclusion on capital. We're going to go to 66%, but please keep doing what you're doing while we rape you. No, if you then said, okay, if you're going to invest in seed round funding for entrepreneurs, you're going to invest at the seed round. Any capital gain you make off that seed round investment has a 33% inclusion rate. Do you know how much money would run into venture capital funds to get that done? Right there, boom. There's your investment. And wouldn't it be better to invest in these early stage businesses and one of them hit and become another Apple, another Google, another Amazon, another Nvidia? You only need one of them to really make all of that worth it. Wouldn't it be better if a company hit and started employing hundreds of people, that they then pay income tax, then they buy houses and they pay property tax, and they shop in the local community and they pay sales tax? But no, we want to punish that person by going to 66% and discouraging a lot of that investment, chasing capital away. Bring it down to 33. Watch what happens to Canada's venture capital industry. Boom, straight up, right? If you make that particular type of investment, reward that thing. Don't punish it. But again, doofuses as politicians, what do you think you're going to get? The smart people leave. If you want to know good policies. Don't ask an unsuccessful person what a good policy would be. Ask a successful person. Why? Because they're successful. Wouldn't you want more of that? Wouldn't you want more success? But we ask a part-time drama teacher and a mediocre journalist. What do you think you're going to get? Looking only at the fundamentals, which one of the Mag 7 stocks do you think is the healthiest company overall? I think YouTube is incredibly undervalued within Google. They should spin that out. It's incredibly undervalued. Apple. Healthy. Well, when you say healthiest, you're not actually talking about valuation here. You're just saying healthiest. I'd probably say Apple. Do you look at private apartment REITs? I'm in two of them, I think. 2 private apartment REITs. Yes. What are your top 3 favorite movies? Why don't I just give you my password instead of my security question answers? I mean, why don't I just give you my password? There's always somebody who says that, and then they'll follow it up with, what street were you born on? What's your favorite book? Who's your favorite actor? You know, all the possible security questions. Why not just ask me straight up for my password? All my passwords. Give me your email. I'll just email you all my passwords. We can skip all these questions. What's your framework for identifying a stupid question? A stupid question? I don't know that I would say there are stupid questions. I'd say there are lazy questions. A lazy question is something you could easily just look up yourself. What does this word mean? Aren't you sitting in front of a computer? Can't you just Google it? Like, you have to raise your hand in class and ask me and interrupt the whole class. What does this word mean? That's a lazy question. It's not a stupid question. It's a lazy question. I don't know if there are stupid questions. For example, let's say that I was in a room where somebody was giving a presentation on molecular biology. I don't know anything about molecular biology. Every question I would ask would be, for them, a stupid question. But for me, I don't know it. It's not stupid for me because I don't know it. Me asking questions is actually, it should actually be encouraged because you're learning. I just don't know. Now, mind you, it may not be the right room to start asking basic questions, but it's not a stupid question. It's a lazy question. Now, a stupid question would be something like your girlfriend screaming at you. I mean, she's pissed off, and you look at her and you say, "Are you angry?" That's a stupid question. Right away, that's a pretty stupid question. You should know the answer. That's not even lazy. It's just a stupid question. But in learning, I don't know that I would say there are stupid questions. I'd say there are lazy questions. If you don't know something and you ask a question, well, that's you saying, "I don't know and I want to know." Well, that's a noble thing. But if you're asking something that you're typing it in, that you could easily just slide over to Google, type the same thing in and get an answer, but you're asking me, that's a lazy question. I think you can look up lazy questions yourself. Are Fed rate cuts priced into the options of TLT? Well, TLT will be priced on the forward curve. The options will use whatever the market reference rate is for the R. So if they're 1-year options, it will use a market reference rate for the 1-year rate. The market reference rate would be very close to the 1-year treasury rate if you're looking at a 1-year option. So yeah, it would be priced in to the extent that the treasuries have it priced in. I think I asked a stupid question. I think you already covered this. Okay. Unbelievable it took this long and one dramatic job number revision for folks to question the numbers. Yeah, I don't know that I would be questioning the numbers in the sense that uh, there's something nefarious going on. I think I would look at the environment and say there must be something about the sampling. There must be something different in the sampling, given our sampling method, that's not capturing something correctly. There must be something different on this one. But yeah, it is. There is a. There must be. There has to be something there. Um, Regarding the pork beef spread, wouldn't the Brazil imports influence you? Well, of course, the Brazil imports would influence beef prices, but you have a futures price, so whatever is going on is already in that price. It's already in that futures price. The futures price is a mathematical function of the spot price. So whatever is going on in the world in terms of imports or exports is going to be in the spot price. The spot price will reflect supply and demand, and the futures price is just going to be a mathematical result of that price. What Excel version do we need to have ready? I'll be using Excel. I'll be using Excel for Mac, which is distinctly different than using Excel for Windows. I'm aware of that. I am aware that the industry predominantly uses Excel for Windows. I am aware that the industry predominantly uses the keyboard and not the mouse. Everything is keyboard driven. Your hands should never leave the keyboard. I'm aware of that. But the commands on the Mac do not work the same way as the commands in Microsoft in Windows version. So I may have somebody then produce another video on for when I get to the Excel part, because when I do this, we're going to spend a lot of time modeling it on paper first. You never just run to the spreadsheet. You need a plan. You need to know exactly what you're modeling first before you even go to the spreadsheet. Going to the spreadsheet, that's the easy part. You're just getting the tool to do it for you. I may have somebody then, after I do those, show you, well, how would you do it if it was Windows based? So then you could just skip my version that's Mac based and just use the Windows based, because I use Mac. I refuse to use Windows because I have pride. I just refuse to use Windows. So, yeah. What Excel version do we need? Can open source spreadsheet software work like LibreOffice or OpenOffice or even Google Sheets? I imagine, but as far as the commands go, I can't possibly give commands for 15 different versions. If you know the comparable command in whatever it is that you're using, that's fine. I'm going to say that it's that what I'm doing is less about that. It is more about how would we model this line item. Putting it into Excel, I think, is the less interesting part, right? But we're still going to do that. Unfortunately, Mr. Softy doesn't want you to own his software. Mr. Softy, my 32-bit version of Excel was rendered useless by 64-bit architecture updates and no free Oh, I see. Are there any new targets you are looking at? Do a theta allocation on? Yeah, I put 5 up on in the applied level. I said new positions would be moving to the applied level, and they have. I put 5 up that I'm doing allocations on, and of the allocation I get, I will do theta portfolios on them. Doing an allocation factory is like it's kind of a cross between I want it and I want theta at the same time. So yeah, I put 5 new ones up. Do you think global markets will have a sell-off if Japan raises interest rates? I don't think they're going to raise interest rates at the next meeting. That's my thinking. I think they made interest rates positive just because, hey, look, we're a carry trade and we have a negative rate. That doesn't make a lot of sense. So let's make it positive so at least we get some income on this idea. So we we do get some interest rate on it, and I think that's why they went positive. But I just don't see interest rates rising in Japan, and if they do, not for any length, any significant length of time. Unless you get a yen that drops to 170, 180, then I think at that point they'd probably say, look, we got to do something. We got to do something here. But they've also lowered the pace at which they're buying securities. So they have that going on at the same time. So I don't know that they're going to be too anxious to go much higher. But let's just say that they raise interest rates at their next meeting. Yeah, I think that could cause a problem, because that would give the market the idea that this is the beginning of something longer, and yen would repatriate probably quickly. And being that it's hard to tell where the carry is sitting, is it all sitting in the peso? Is it sitting in US Treasuries? Is it sitting in T-bills? Where's the carry sitting? Is it sitting in NASDAQ, which would be stupid, but there is no law against being stupid. If there was, Trudeau would be in jail. Who knows where it is? So you could have some effects that are non-predictable. The only thing you could predict is that there would be some effects. You think global markets will have okay, I already did that. What's the strongest bear case and strongest bull case for equities right now? Strongest bear case? Valuations are stretched, and I think valuations are have already priced in rate cuts. That getting the rate cuts now is just getting what you're already paying for. I don't know that there's multiple expansion left to go, which means it must be earnings expansion at this point that takes us higher. There is the question of AI. Are we right near the cusp of this big explosion, or have we made the leap to where we are now and it's 20 years of this? Because this right now is not ready for prime time. Do we have another couple quarters of investments before companies start saying, look, we're just not seeing the return on this stuff? You get an abandonment of that. You could have a lot of downsizing very quickly in a lot of companies. That was the dot-com bust, right? Is you had a lot of downsizing right away, and a lot of VC companies folding up. You got some 10,000 VC funded AI startups in the last year. 10,000 money rushed into that space. If that thing falls apart, that's a pretty bad thing. So yeah, I would seem to think that that's your bear case. Your bull case is that this is really something, and we're just about there, and we're at the very beginning innings of this new revolution in capitalism, and we're going to make progress in leaps and bounds at this point. We've broken the barrier, and it's just a matter of how quickly things can scale up, and that the bottleneck are the data centers and the chips. That would be the bull case. Both of it comes down to AI. Both of it. Once recommended ZPR, short to medium term. What is the advantage of rate reset preferreds versus non-reset? Rate resets mean that every 5 years the rate resets, as opposed to non-resets. So let's say that you had it's kind of like the difference between a fixed rate and a floating rate bond, except the floating rate on these preferreds are 5-year floating rate, right? They reset every 5 years to, I believe it's the 5-year, whatever the 5-year yield is plus a spread. ZPR is 1050, 1060 now, up from mid 8s. It's had a good run. It is 4.8% dividend yield. It's a nice monthly dividend yield. It's a nice little earner. If you're looking for something that is near cash, that isn't going to be interest, but it's dividends now, Dividends are taxed at a preferential rate, and you're not too concerned about the value of the capital. You don't want it to drop considerably, but you're more concerned about the predictability of the income stream. This is a great little thing to have, because it is nice and tax efficient on the dividend versus earning interest on a money market security. You have touched on the validity of government data following massive jobs revision. Oh, have you touched on the validity? Yeah, I think I made some comments on that. What are some good economics books that you have read? Knowledge and the Wealth of Nations, I think, is probably, I think, a must read for everyone. Economics. There's not a lot of good, interesting stuff in economics. It's mostly in more finance related. Best way to play rate cuts: duration. Rate cuts, duration. Anything with duration. Finish summer work term. What time have we got here? 2:20. Finish summer work term in asset management, private debt, and commercial mortgages. Understanding REITs and the applied level, and your videos on M REITs were extremely beneficial to go through before I started. Oh, good. Late 40s, Canadian, recently moved to the US, still trying to figure out what to do with asset holdings in K country. Can I liquidate SRF, single family residence property, and move to US equities? So you have left Canada, you moved to the US. I guess the question is, are you a US resident, or are you still a Canadian resident? If you're a US resident, you would have had to pay some kind of exit tax on the value of whatever unrealized capital gains you have. It's the sooner you sell your property, the better it is, because if you have left the US, then at this point in time, this is not your primary residence in Canada. It is an investment property. So let's say you've owned it for 5 years and you own it for another 2 years before you sell it. 2/7, because you've had it for 7 years, 2/7 of the gain would be taxable. 2/7 of the capital gain would be taxable. Is a recession coming for the US economy? You tell me. No one knows whether a recession is coming or not. All we can say is that the conditions are or are not present for a recession. So we could say the conditions for a recession are more present than they were in, let's say, 2017. Have you ever had to update your CSC videos for CSI? No, I when I did them once, I said that this is it. I don't want to do this again. Way too much time. It just took way too much for the value that you get paid for it. I did it more out of, well, I want to keep my name in the CSC videos, but now I don't care. So no, I don't think that I would be redoing them ever again. Is content stage similar enough that they can reuse the videos year after year? That I don't know. I have no desire to update them. So if anyone did contact me asking if I wanted to update them, it would be a no. It would just be a straight out no. No. AI to voice change, new presenters in your applied level. AI to voice change new presenters in your applied level to your voice. No, I think, and these are the ones that I'm talking to are well spoken, well educated, and the key thing is in what they want to do or what I want to have them to do. They know way more than me. If I knew more than them about what I wanted done, it's like, well, I don't want to be the smartest person in the room. You can't have that. So they have to be more knowledgeable than me. Good time for me to enter into market, or I need to wait for the elections? I know nothing about you. I know nothing about your time horizon. I know nothing about your goals. I know nothing about your income. I know nothing about your wealth. I know nothing about you. I would be guessing. I'd be making stuff up. Domestic student, I can't help but feel bad for the students who are lied to and deceived by these education consultants who are paid hefty commissions. That is a problem. You are right. That is a problem. And many times, for the consultant to get paid, they get paid by placing you. They will lie to you. That is an issue. Specifically feel bad for the students who want to come here and get education and skills that are needed in our country, not just using the diploma to get citizenship. Yeah, well, I think you're right there too. A lot of students who come here use it for citizenship. They particularly use it for citizenship. In fact, when I was at Sheridan, there were a few classes I had to teach where you got the feeling very quickly that you were not a teacher. You were an immigration officer, and this was your classroom wasn't a classroom. It was just the waiting room outside of immigration, because they didn't care. They didn't care. They just wanted to get the degree, and as long as they got hired as a supervisor somewhere, supervising 6 people, that was it. So they all worked at just uh, local businesses, grocery stores. This person was supervisor of aisle 6, supervising these 6 people. This person was supervisor of aisle 5, supervising these people. Everybody supervising everybody else, and everybody a supervisor of something. I'm the supervisor of bread. All designed to get citizenship. So yeah, that does happen a lot as well. Don't understand why the government doesn't shut these down. I know. Looks like it is so ingrained in the Canadian university model that there would be significant troubles. Some colleges and universities rely on a lot of that revenue for their funding, that if it disappeared, they would have a problem. So it is you got them addicted to a drug that you can't take away at this point. What textbook should I use for studying CFA 1, 2, and 3? The CFAI books. CFAI provides you with the readings. I am a charter holder, thanks to your level 3 content, and I do have access to applied level. Can I get access to CFA content to keep abreast with the current curriculum at some discounted price? You see, I had this idea of a charter holder package where each year you would get whatever the new readings were, you would get them so that you could satisfy your continuing professional credits. But I don't own the CFA side anymore. There was some discussion of putting something in place, but I think that discussion just fell to the wayside. I don't know if there's any plan to revive that, but you can only bring it up so many times before you don't bring it up anymore. So I don't know what to say about that. But I will say this, you can buy level 1, level 2, level 3 books on Amazon each year, and I think the cost is like $300 and some odd dollars for each level. So for under $1,000, you can continually have the new levels every year. Maybe you wait every 3 years and you just buy them all every 3 years to see what's new. Why are there so less hedge fund shops in Canada? Lack of capital. And there's another, we have an investment problem because we have a lack of capital, and fewer hedge fund shops, because of a lack of capital. There just isn't the capital here. We don't have a capital-friendly country. This is what you get, right? You get a lack of competitiveness with other countries. Trump wants to lower rates. Considering a Trump presidency might also get rid of Fed folk. I think you'll have a hard time getting rid of the Fed. Oh, getting rid of Fed folks, appoint their own guys. Yeah, yeah. You probably need Congress and Senate to get that done. Do you think that would meet the current rate cuts priced in S&P? No, I think I don't know that the market is really pricing in aggressiveness based on Trump. I think they're just pricing in uh, aggressiveness. 0.1% of the portfolio value used for sizing options for theta play. Why? If you already carved out a theta sleeve, and the theta sleeve should be 0.1%. Whatever 0.1% comes to should be the value of the theta sleeve. But if you're saying, look, I have $1 million portfolio, I took 100,000 out, that'll be my theta sleeve, then you've sized it. Then you have sized it already. Last market outlook video, you mentioned the flattening of the nominal yield curve could be indicative of a recession. The steepening, you mean? The steepening of the yield curve. So yield curve upward sloping, it becomes inverted. This is getting flatter. The more inverted it becomes, it's getting flatter. The curve has steepened. It's a flat curve from the 2 to the 10, but in terminology of yield curve steepening, flattening, it's gone from inverted to flat. That's a steepening of the curve as it continues up. I can't remember in what context I said what you said that I said. Flattening of the nominal, how certain significant is that relation? It has I think 100% track record that every inversion of the money market to capital market curve has preceded a recession, and that the curve tends to uninvert before the recession. Not that it's a cause and effect, just it's more of a correlate. Are those heels in the background next to the umbrella? Yeah, they're not my shoes, but yeah, they are. I don't know. What are they? 4 inches, 5 inch shoes? I don't know. But they're not mine. I saw on the outlook trade deficit. It was 100 billion month. Yeah. Could you expand on reasons to worry or reasons not to worry about this number? This number taking into account U.S. software sale. Well, you can break it down. The trade report is given to you. You can see what the exports and imports are made up of. But yeah, it is a trade deficit. That's not just one direction. That's net. That's netted out. You could say it's cause for concern because that is value leaving the U.S. You could say it's not cause for concern because what is being imported is low value stuff that if that low value stuff had to be done in the US growth would be much lower because resources would be taken up with this low value stuff instead of higher value stuff. I've given the example before where I have somebody that cleans my pool, I have somebody that cuts my lawn. In essence, I am importing those services. So in essence, if you look at my house as a country, I have a trade deficit. But if I had to go clean my pool and I had to go cut my lawn, that's how many hours a week that I would be giving up. How much content could I be doing that has a higher level value? So by importing these services into my household country, it frees me up to do higher value things. So we could say that the trade deficit really is just the free market at work, and it's the efficient allocation of resources that it is better for U.S. growth to not have to do these low-level tasks. Successful investors never did a DCF, so why is it taught like it's needed to make heaven? Well, I don't know if I would agree with the first part of that sentence, successful investors never did a DCF. I don't know that I would agree with that. I think you could say it in a different way that might be true, is that there is that there are successful investors who do not engage in discounted cash flow analysis. You could say that, but you must also say there are unsuccessful investors who do not do discount cash flow analysis. It cannot be what you're saying, successful investors never did, meaning that the successful ones don't do it, only the unsuccessful ones do. There are successful investors who do valuation. There are successful investors who do not do valuation. There are unsuccessful investors who don't do valuation, and there are unsuccessful investors who do valuations. So I don't know that I would accept your premise. Why is it taught? It's taught. The big part of it is uncovering the drivers for the company. So looking at its revenue, what are the key drivers of revenue? What are the key drivers of expenses? So you really understand this company. So when you're invested in a copper miner, for example, that runs a smelter, and you're seeing energy costs in the US going up, you would say, that's a driver of costs for my copper company. I know that X percentage of this particular cost category is energy. And I already have a sensitivity analysis that if energy costs go up this much, their costs go up this much, but the price of their output is not rising. So their net, you would see it and you would understand the implication of it right away. So that when you looked at your stock and you thought, they had great earnings, how come they're dropping every day? It's because energy costs are rising, right? Energy costs may be rising faster than their output costs are rising. You would just know this. For apartment REITs, if we have, let's say in Canada, there's 2 provinces which engage in rent control, a couple others that don't, but you hear that the province of blah, blah is going to start putting in rent control. And you say, hang on a second now, this apartment REIT that I have has 16% apartment exposure to this particular province. That's going to be a bit of an issue on the growth in the net OI, in net operating income for that particular. You would recognize that very quickly, as opposed to not knowing what drives revenue or what drives expenses and waiting for earnings to go, oh. You would know it beforehand so that you could move ahead of other less knowledgeable individuals. So going through the exercise, it's the going through the exercise that has all the value. What you come up with at the end, I don't know that it's that valuable. Discounted cash flow is built on a mountain of guesses, good guesses, educated guesses, sometimes very good guesses that are kind of precise, but still just a bunch of guesses. So I don't know that looking for that final number and saying, aha, $57, it's 68 in the market, it's overvalued. I don't know that for me would hold any kind of value at all. I would have figured out much before we got to that based on what I'm reading, that price is nothing that I'm interested in. I would have already figured it out intuitively. So it is the process you go through and the steps you have to go through that are more important than the outcome. Are there AI subtitles for the course videos? No. Any transcript there? No. I'm worried if I could not understand all of them in English. Yeah, that is a limitation right now. The voice from my CFA lessons just got the point you mentioned. You're Canadian. I was mind blown. Yeah. Successful investors never did a DCF. They pay someone to do it for them. It's still being done. I mean, it's still being done. It still is the process. I don't cut my lawn. I get somebody to do it for me, but I understand the importance of cutting my lawn, and I have cut lawn in the past so that I can look at my lawn and I can judge the quality of the work. I can look at it and say, well, you did very well, or no, you didn't do very well, because I have done it myself. So, yeah, when you get to a certain level, you do delegate tasks to other people, but the task is still being delegated. Successful investor is not an entry level job. You have to work up to successful investor, and unless you've gone through the process of I'm not saying valuing, but the process of doing it, it's hard to get to that successful investor status where you can then say, well, I'll have other people do it. If it was useless, you wouldn't hire other people to do it. That if there was no value in cutting lawn, if it self-cut itself, I wouldn't have anybody cutting lawns, right? What do you read every day? It's all market stuff. It's all market stuff. Sometimes I feel I need to know every news that could affect my stock, but then find the noises lower. Yeah, you filter out a lot of that stuff. Everyone has an opinion. Keep that in mind. I mean, if you scan the news, you'll see, uh, predicting sideways markets going up, markets going down. All respectable people. But it's easy to find, somebody saying gold is going up, gold is all fully priced, gold is going down. Everyone, nobody, because here's the thing, nobody knows. It's going to be what it's going to be. When you come to that conclusion, you think, well, then you can't really do anything. No, you can do a lot. It's just the idea of spending any time thinking about, well, where's the price going to go, is a waste of time. What you have to do is say, do we have the environment that is supportive of the value of this asset? And if the answer is yes, well, then there you go. Where it's going to go, I don't know. But I think we're in an environment that supports the value of this asset. That's all you can really control. Preparing for CFA, found your way of teaching really effective. I'm really willing to buy your CFA level 1 course. Can I get a discount of 50%? It's not my CFA course anymore, right? I sold the business to Serify some 2.5 years ago. So I have no influence on those decisions. Could you please turn on the live video comments? I do. I do. I don't. I do. Even when I watch it, I see the comments on the side. So, I mean, I've had a couple of people say, "Can you turn them on?" I do. They are live. There's 2 little radio buttons. I click on both of them on setup. It's on the same level. This is good. It's on the same level since pandemic levels, though it pays highest dividends among big 5 Canadian banks, but hovering 65, 67 range for 3 years. Bank of Nova Scotia, you must be talking about. Yeah, I think it's a nice one to sell puts on. Third largest bank. Someone go tell Warren Buffett people in finance that use Excel aren't allowed to touch their mouse. I didn't say they're not allowed to touch their mouse. I said when you're using, the goal is to never take your hand off the keyboard, because it takes time. The goal is to do everything from the keyboard, because you're going to be doing it all day long. You don't want to keep moving your mouse around and clicking and looking. You want to just look at your screen and click away on the keyboard. I haven't found an effective way to do that with Mac yet. Okay, where'd we leave off here? Oh, way back up there. I lost the place where I was at. Ah, there we are. Learn how to read 10K and no peace. All others is just nonsense to justify a wage. What do you see as the next hype after AI and NVIDIA story fade away? Who knows? It's like, what's the next bandwagon that drives by? I don't know. A few chats ago, I mentioned PM accounts. We had a video to the applied level about trading in one. For when I have the balance for a PM account. Margin calls with PM. Portfolio margining. I don't know why I would do a video for that. I mean, if you're handling position margining, portfolio margining is just that much easier. I don't know that justifies any. I don't even know what I would show. What would I show? What age did you get your first degree? Geez, I forget. Young 20s, 23, 22, 23, something like that. Why has September generally been a weak time for the stock market? So much research into these time of year effects. I think they're less. I think they're less relevant today. There's some argument about year end for certain funds that then rebalance. There's certain arguments for, well, people have the summer off. They come back in September. They start looking at their portfolio. They want to start making changes, or they want to rebalance. A lot of things like that. It's kind of like, why is January 2nd, the January 2nd trading date, so fundamentally different than December 31st, right? You come into the new year, it's like all this hope or all this euphoria, and up you go. It's like, but seriously, only 48 hours have passed, but somehow it's so dramatically different because it's a new year. But, doesn't seem to make sense when it's just a 48-hour time difference. So it just could be some behavioral bias effect. There could be something structural. If it was more structural, I think research would have figured it out. But I think going way back from when I was doing, PhD seminars and all the readings, that was in there. The end of month effect, the end of quarter effect, the September effect, the January effect for tech stocks versus S&P. I mean, there's so many effects. All these calendar effects. I don't know that that's ever gotten solved. Can you please list the steps that you follow when you come across a new stock and start working on it? I put it on my watch list. If I think there's a very good story to it, I think, there's something here. There's something here. I'll sell some puts on it, or I'll buy a small little position. Then I hit the 10K, and then I start reading, and then I make notes. Sometimes I'll be 2 hours into it, and I'll say, nope, I'm good. I think I did the right thing, or I'll change my mind, or I'll need more work, or listen to a few of the conference calls. Yeah, and then you just stay with it. Last time we had rate cuts in 2020 during COVID, stocks, well, that's COVID. I don't know that I would look at the effect that rate cuts had during COVID. I don't know that I would do that. Stocks pulled back at the first rate cut and mega pumped after the last cut. Possible we do the same I don't know that I would look at COVID as being as being a template for the next time. That was specific to that event, right? Stocks were responding to, you're shutting down the economy. That's what it was responding to. Do you think it is beneficial to do applied series before level 3? Well, I don't know. The CFA series, level 1, level 2, level 3, is generalized. It's very generalized. And that's what it's meant to be, a generalist designation. So it is about studying finance. There is a difference, a big gap between studying finance and practicing finance. And I think anybody who has graduated university and been thrown out in the business world can attest that, listen, I know I learned this in university, but there's this big gap between actually applying it. That's a big thing in entrepreneurship when you're training students to be entrepreneurs, is that big gap between, I know I learned this stuff, but it doesn't seem to work in the real world. It doesn't seem to apply right away. That's a good statement to make for a lot of marketing courses you take in university, is a lot of that marketing stuff that doesn't work anymore, right? So you wonder why you even go through it. So going through the applied level is practicing finance. So not only are you studying finance, you're practicing it at the same time. I would say that hour per hour, you would be worth more to an employer with the applied level than with CFA. But the applied level certainly doesn't have the cachet and the brand name that the CFA has yet. I won't stop. But given the number of subscribers that we have now, and I can see the emails. I know where they are. I know that we have a significant number of well-placed subscribers. In fact, I know that the head of the CFA program for a competitor we have is an applied level subscriber. I know that because I'm familiar with the person. I'm familiar with what city they live in and where they live in, and there it is. I even sent it to somebody saying, "Is this who I think it is?" And the answer back was, "Yep." So look at that. So based on how quickly this is growing and how well placed some people are, it is. And I think one company wanted to use it. And I'm not sure exactly what it was for, but they wanted to use it for something. So they got permission to get an account to review. But it is becoming more and more recognized that it just makes obvious, I think, an obvious, inevitable sense to create a designation around the sector studies, because that's really the centerpiece, is to have a specialist designation and a certificate for the financial modeling. It just makes sense to do that because it is being used. So I think it can have that level of recognition as well. So I want just think about it in terms of that. Like CFA is to study finance, the applied level is to practice finance. What are your thoughts on market efficiency? I think you can't discount that the market is efficient, especially at the level of large cap stocks. We do have a generally efficient market. Now, efficiency is about how quickly known information gets priced into the stock, and even at a higher level, unknown information. It says nothing about the interpretation being correct or the price being correct. So you could get information out and the stock adjusts in price to that information. Well, market efficiency doesn't say that adjustment was correct. It just says that information is in the price, but the price could be wrong. The interpretation of the information could be wrong. Market efficiency relies on something called the wisdom of the crowd. I disagree with that. I don't think that you have the wisdom of the crowd. I believe you have the stupidity of the crowd. that once you crowdsource something, I don't know that you get wisdom as much as you get stupidity. That I think that the prices uh, do reflect information very quickly, but that prices reflect the stupidity of the crowd, not the wisdom of the crowd. And I think it oscillates, between stupidity and wisdom, with most of the time stupidity. If there wasn't stupidity of the crowd, there would be very little opportunity for me to make the money that I make. I would never have been able to buy cap rate at $43 if the market was efficient and correct. I would never have been able to do that. Uh, so don't think of efficiency as correctness. Think of efficiency as, listen, I read this about this company. I wonder if it's in the price. Yes, it is. It's in the price. If you read it, it's in the price. If you know it, everybody knows it. It's in the price. That doesn't make the price correct. You could have a different interpretation of that information, and you could be right. The crowd could be wrong, and the crowd is wrong a lot, a lot. So market efficiency doesn't mean no ability to earn alpha. It just means if you're relying on the information that you have, you better have a superior interpretation of the information. Thoughts about owning physical gold? Can you own physical gold in the U.S.? I thought that all gold that you could not own physical gold in the U.S. That it had to be owned through something else. I don't know. Maybe you can. Costco sells gold bars, right? Collecting bullion doesn't seem like a bad idea. No. Weight to value probably is better than owning copper, and I think copper is probably going to be, over the next 4 or 5 years, a better returning metal than gold. But copper takes up a lot of space. You need, $4.30 a pound as opposed to $2,500 an ounce. You need a lot more space to hold copper. But I think that copper will outperform gold. What kind of wallet do you use? Inside of my pocket. In fact, I don't care. I don't carry cash. I rarely carry cash. Not in Canada. In Costa Rica, I carry cash, but not in Canada. I carry a debit card in my back pocket. I don't use a wallet ever. What were your top 2 or 3 worst investment decisions? One was a a capital pool company that I invested in with a piece of shit. I've said this story before. The guy was just a piece of shit, and I just didn't see it, or I refused to see it, even though the signs were there. I refused to see it, and he was just an asshole. That was a bad decision. Being short beta in 23 was not a good decision. The year before, holding GM for too long was not a good decision. As it went from 60 to 50 to 40, I kept thinking, I think the worst is over. I got out at a loss, but it was not a good decision to stay in that long. So there's 3. Thoughts on moving to a high cost of living area like New York for higher pay early in my career. My savings percent stays the same. I'll be saving much more, but we'll be losing on all the suburban comforts. A city living is a lifestyle, right? You have to want to do it. You could not pay me enough to live in Toronto. I mean, I did live kind of in Toronto for a couple of years, hated every minute of it. I don't like driving into Toronto. I don't like going anywhere near that city at all. You could not pay me enough to live there. You would have to pay. The city of Toronto would have to give me a free condo, and I mean a 3 or 4 bedroom, 3,000 square foot condo. Would have to give me a personal driver and would have to pay me to live there. That's how much I would not live there. That's what it would take to get me to live in that cesspool. I hate Toronto. Now, I call it a cesspool because I just can't imagine living in that kind of traffic around that many people all the time, all the time, all the time. Sentenced to having no backyard, no front yard. I mean, unless you're willing to pay millions for a house, I just don't understand why anybody would want to live there. I don't even understand why businesses want to be there when nobody else really cares to be there if they don't have to. That if a business said, we're going to set up an office over in London or over in Hamilton or over in Niagara Falls, who would like to move? I bet you'd have a whole bunch of hands raised saying, I'll go. Why are they paying these high rents? I think cities, a lot of cities, I think, are topping out in terms of their desirability. You have to want to live in a city, and they're not cheap. And a lifestyle in the city is not cheap, and nightlife in a city is not cheap. So you have to give up a lot and live in a small space. And in the end, you must really like the city. You have to like the city because it's your backyard, right? It's not for me. I'd rather live in a medium to smaller city with a lot more space where I could drive somewhere and back without taking the whole day off, without having to worry about, being parked on some highway for half an hour at a time going, oh God, you know, no, that's me. I mean, that's me, but you have to sort of make that decision for yourself. I've been to New York City 3 times. One time I sort of had an okay time, but I didn't like the city. I just, that much is too much for me. I having grown up in a smaller city and having lived in smaller cities, I did live in Toronto for a while, lived in Cleveland for a while, but everywhere else were sort of like secondary cities or even third level cities. I much prefer a smaller city, but I can work from anywhere. Hmm. Let's start from the bottom here. When are you going to make CFA Q&A? I don't know. St. Catharines, Niagara is where it's at. That's where I am, right in the middle, Font Hill. Talked about superior interpretation of information. How does one go about learning that skill? Life. You have to know an industry really well, and life. You just have to, you're never going to know it on day one, but you pick a sub industry and get hungry on your desire for knowledge, and just keep reading and reading and reading and learning and reading and listening to conference calls from the different companies in the industry and reading their 10Ks. And I don't mean reading the words, I mean looking at this and thinking and making some notes and thinking about that and tying it to, I mean, deep dives. And you will get to know it. You will get to know it. All my best decisions have come after long deep dives. All my best decisions. When I make a mistake, it's usually because I didn't spend the amount of time. When I do something, I think, that's not working out. It's usually because, you know what? I didn't put in the time necessary. I listened to somebody else. I listened to this. I thought, well, that makes sense. And I went ahead and did something, and now it's not working out. Unless I actually do the work, it doesn't really work out. So just switched my career from IT to managing money, starting from scratch. Seems like there are many more opportunities in New York. Well, then that's where you'd want to go. Any cities or states in US you see growth specifically in the finance sector? I don't know. Again, I'm far removed from the job market, so I wouldn't even know where businesses or where everything is located in terms of cities or states. Really hate living in New York City. Any tips? For what I do, I don't need to be in any particular city. Where do we listen to conference call? Right on, and whatever company, go to investor relations, and they're all right there. Any advice for undergrad finance student that doesn't know what sector he likes? Well, you're undergrad. Give it some time. Relax. You don't have to know it all now. Um, Enjoy being a student for now. There's plenty of time to figure that out. Just relax. All right. How do you avoid alcohol? I just don't drink it. It's just I don't know. I don't have to try to avoid it. I just don't want it. Same with heroin. I don't want it. It's easy to avoid. Fentanyl, cocaine, all of that stuff's easy for me to avoid. I don't think about it. I don't want it. That's all. Just don't want it. All right. We are 3 hours, 4 minutes. It's 10:19. I'm going to finish my tea. And then call it a night. There is no market tomorrow. We know that. Market is closed. It'll open, I think, tomorrow night, 8 o'clock. I don't think Globex opens at 6 after a long weekend. I think it opens at 8. We'll find out. Anyways, you have another holiday tomorrow, and then we're back at it for a shortened week on Tuesday. If you're in Canada, you've got Risk on Wednesday with Bank of Canada. I think the apartment REITs will do very well on that. So I'm not budging from my cap REIT position until then, and then that should break us past 52.50 on cap REIT. And then you got the jobs report on Friday, which I don't think will give the Fed permission to go 50 basis points. So if you have TLT, there might be some TLT risk in the market realizing that, nope, 25 is going to happen. So be safe out there. And already cold tea. Yeah, it's already cold tea. And we will see you next Sunday night. Ciao.